Let's go inside the boardroom. Let's suppose you win a proxy fight and or you just get invited onto the board. You go to your first board meeting, and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we present it with a plan.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. MasterCard is building on its core business, branching out into new products and services. It's up to CFO Sachin Mehrad to ensure this growth strategy pays off.
The key to being successful in this kind of environment is to have a diversified portfolio.
Chief Future Officer, Wednesday on Bloomberg. Brought to you by Workday.
Bloomberg Surveillance, we welcome all of you this morning. Kaylee Lyons in for John Farrow, Lisa Bramowitz, and Tom Keene. A huge news flow this morning, getting ready for the inflation report. Lisa, we haven't talked about the dollar yet. It's in a delightful churn here. And I would note yen at 134.84, a stronger yen over the last week is of note.
Yeah, you've seen a weakening in the dollar against the euro as well. And how much is this just sort of the optimism that perhaps we are getting to the peak inflation and earnings are coming in better than expected? That dollar weakness giving a little bit of a lift, perhaps, to some of the risk sentiment that we've seen over the past few days.
I note also the Bloomberg Financial Conditions Index does show a more accommodation here, less stress within the system. Claudia Sahm writes brilliantly about the stresses within the American political economy, founder of Sahm Consulting, writing for Bloomberg Opinion in the New York Times, and a former Federal Reserve economist, and always interesting, even if you don't agree with her. Claudia, David Blanchflower published a working paper at NBER yesterday with some colleagues from Dartmouth, and it's real simple. He says, calm down. The labor economy is not hot, hot, hot. Wages are not hot, hot, hot. You say that may be right, or the worriers may be right as well, and there may be a middle ground, and what we need is time to let things solve out. Claudia Sahm wants to go out the x-axis. How much time do we need to get this fixed?
Yeah, that's the big question. So we are absolutely seeing a very disrupted economy begin to heal. That is one important interpretation of the jobs report that we saw last week. We have a lot of hiring. we do have strong wage growth. How else are you going to solve a labor shortage and bring workers back without paying them more? That is absolutely a piece of what we're seeing now. We see services becoming more prevalent in consumer spending. So a lot of the disruptions we saw appear to be unwinding. They gotta unwind faster than the Fed keeps going with the rates. So that's the big question if we have enough time.
The politicians, Claudia, have a timeline which is based on election days. You don't, and we don't either. Is this an inflation story to be solved in quarters or years?
To be fully solved, it's a solution over years. I think we could and are on track to be seeing some relief in the coming quarters. If we don't see it, then we're going to a very weak recessionary place next year. So that'll do a good number on inflation if we get there. But I think a path that's really a healing that is slow but steady, pointed in the right direction, gets us back to something like 2% in 2 or 3 years. This is not a quick turn in terms of, turning back the lights on, getting us back to a normal. That just takes time.
Well, but Claudia, the new normal is something people have been talking about, especially with the participation rate remaining so low. And this is the reason why the likes of Danny Blanchflower and others say there's more slack in this labor market than it may seem. Do you understand why there are so many people still not going back to work? Is it long COVID? Is it retirements? Is it all of the above?
There's some very good research, though it is preliminary, that the long COVID, just that piece of it, could explain 2/10, 3/10 off the labor force participation rate. That's pretty close to a fifth of that gap that we've seen open up. So that's a piece of it. We know people still have care issues, just the ability to be working. We've seen a lot of people unable to work as many hours as they want to because, they get sick, they have to come home. There's a lot, and then older workers that took this as an opportunity to retire. Well, and some of them could have retired a lot sooner.
So, Claudia, the reason why I bring this up is because all of these issues are sticky issues, right? They're not going to bring people back in. You're not going to necessarily see that participation rate go up. So when you talk about time, what is your fear that if the Fed does back off or doesn't raise rates as quickly to allow some time, that it gets it wrong yet again when its ideological framework has been proven wrong or at least delayed again and again?
I think it's a matter of interpretation. The Fed's baseline interpretation of what's happening in the labor market is running really hot. There are signs that demand is cooling all over the place, the business investment, the consumer spending, but when they look at that labor market, they're seeing hot. Not everyone, right? Governor Waller has expressed some views about the vacancy rate coming down without unemployment rising. That is clearly a correction of some structural issues. So the Fed is open-minded, as the Fed always is. Their baseline has been looking at the labor market. It's too hot, it's unhealthy, and that's what they're trying to cool down. That could be too much.
Well, Claudia, to that point, looking at the NFIB Small Business Optimism Survey that came out, 49% of all owners reported job openings that they could not fill in the current period. So is what we're talking about realistically just an absence of hiring, but not necessarily businesses that are going to be outright firing people, especially as they've had difficulty bringing people back after layoffs during the pandemic?
Right. A lot of the jobs that are missing are part-time jobs. I mean, so we've seen an increase in the multiple job holders. We've seen people moving back from self-employment into being employees. That was a very unusual pattern in the crisis. The optimistic scenario is that the first place, if businesses see demand slowing down, which it clearly is, and it's been at an unsubstantiably high pace, when they see it slow down, that they're going to go first to pulling job openings and not firing, because they've learned, hopefully at this point, that if you fire a bunch of your workers, it can be hard to bring them back.
Claudia,
so I think
we got to go because of breaking news. Claudia Sahm, thank you so much, particularly on inflation tomorrow and some of the labor linkages that we see there as well. Lisa, it is a single headline that has been widely expected. This is not just a pipeline like Nord Stream or all the rest of it. This is the mother of all pipelines. Started in 1960. It's the longest pipeline in the world out of the sprawling Russia south of Moscow. And it just simply has three legs, one up to Latvia and Lithuania, one across Poland, and the other one across Belarus and Ukraine. The Russians shut it and oil moves.
Yeah, we see oil prices climbing on the heels of this to session highs after a number of days of declines. They started picking up yesterday. How much does this really start to change the calculus as people start to take the idea of reduced supplies of Russian oil and, more importantly, for the Euro region gas down more substantially? That's sort of the worst case scenario, is if Russia cuts off these supplies. How much can they get ahead of this at a time when there really are some clampdowns already? There were some reports about how in Scandinavia, they're constraining their gas exports to the rest of the world because they too are facing shortages and want to preserve for their own homeland.
And what's so important here, and Kaylee, it's Javier Blas, who was out earlier this morning in the European Morning on linking all this in to what's it actually going to cost in Europe and the whole recession battle in Europe as well. I mean, it folds right into that.
Well, that is the gigantic question mark overhanging the European economy, Tom. So much of it is dependent on the flow of fossil fuels from Russia so that they can power their economy and get through the winter. And as the ECB tries to hike rates in order to tame inflation, how do they do that knowing that you could be facing a deep recession in Europe if the gas gets turned off? And of course, then do they have to respond even further to those inflationary forces on energy prices? It's just this vicious circle that makes it impossible to do a monetary policy job at the moment for Europe, Tom.
It's interesting, Tom. You mentioned the gas prices, and the gas prices did increase. Oil prices increased on the heels of this headline. But you see a knee-jerk response in equity futures in the United States. And how much is what we've seen in terms of the resilience, the buoyancy, the momentum, how much has that been driven by oil prices coming down so dramatically over the past couple of weeks?
Can we agree that maybe the recession worries have drifted away a little bit with the bang-up jobs report on Friday?
People are.
I don't know where to go with that.
You know, I think it's a valid point. I think it's a really important point that the jobs report on Friday was a game changer for a lot of people. This is not a recessionary economy in the short run, at least if you believe that data, and if that data is not going to get revised substantially lower. If that's the case, then A, how much does the Fed have to go to bring down growth enough to get inflation lower? And B, how much is this completely on the heels also of this idea that oil prices are going to be constrained, that there's not going to be another shock, right? Yes, I do think that that report was a game changer in terms of resilience, but I don't know that people are really necessarily not worried anymore.
Waiting to see what happens with Netherlands gas here in the Such. What I can tell you is West Texas Intermediate, 91.54, up 78 cents. That's off an 88 level of a day, 2 days ago. Brent crude, 97.60. It was up a little more moments ago on the shock of that headline that the major Russian pipeline to the south has been shut down as of August 4th. As Lisa mentioned, equities pull back a little bit now, red and green on the screen in one big churn. Lisa, we've got a minute here. It's a good minute here on Bloomberg Surveillance to get an update on IG and distressed. We haven't done that in 3 or 4 days. How are they doing in the spread market?
Well, this has actually been one of the reasons why a lot of people have been pushing back against the gloom, is because if you believe that the credit market does lead the equity market, the credit market is sending the all clear. And you've actually seen the ongoing rally in investment grade, in high yield. People are being able to come back to the market to borrow, and investors are flooding in to buy. How much can that continue? I mean, honestly, this is one of the big questions. People are talking about investment grade credit. We're going to be speaking with Wei Li of BlackRock later on in this morning, and she's very high conviction on investment grade credit away from equities. How much does that continue?
We're going to have to see on this, folks. It's a huge swirl. And, of course, what we know about the swirl as it comes into the detail, we'll see tomorrow in the inflation report. We'll give that to you at 8:30 with Michael McKee as well. And, Kaylee, as we've heard from so many guests, including Tony Roth, core is what people are going to look at.
Yep, 8:30 a.m. Eastern time tomorrow. So what, 26 hours from now? A little bit less, Tom? That really is what this market is waiting for.
26 hours. It's another chance for the Red Sox to lose, which is probably what will happen into the inflation report. Futures in -7. Stay with us. This is Bloomberg. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Donald Trump is portraying himself as a political victim today, saying he's being mistreated by Democrats who don't want him to run for president. That's after federal investigators searched his home at Mar-a-Lago in Florida. It's part of an investigation onto whether he took classified documents from the White House when he left office. The former president was in New York during the search. ETF manager Kathy Wood says the U.S. is already in a recession and the Fed will have to start loosening sometime next year. Wood spoke to Bloomberg TV.
We believe we're in a recession. 2 consecutive quarters of real GDP declines is the beginning of that definition. 3 consecutive months of declines in leading indicators, which we have now, would suggest the same.
Wood says her funds will stay fully invested during the downturn in what she calls innovation. The Pentagon estimates that as many as 80,000 Russian soldiers have been killed or wounded since the invasion of Ukraine. It's the first time the U.S. military has announced its estimate of casualties. In March, Russia said more than 1,300 soldiers had been killed. It hasn't released any numbers since then. And Boeing is set to resume deliveries of the 787 Dreamliner as soon as Wednesday. That is almost 2 years after they were disrupted by manufacturing flaws. The FAA says that Boeing has made the necessary changes to ensure the plane meets certification standards. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. And the place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
The markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short-term.
Bloomberg Markets, The Close. Weekdays on Bloomberg.
thinking big from the beginning. I mean, the reason that I was interested in doing this in the first place was a much bigger challenge than making a comfortable shoe or doing something in the fashion industry as a narrow opportunity. We thought that there was a big leadership opportunity. We looked around at an industry where there was 20 billion pairs of sneakers made every single year, and it was 100% made from plastic and the hides from cows, and it was terrible for the environment. And we thought that we could offer something to consumers that was differentiated in the way it feels, more comfortable, higher performance, and do that because we use sustainable materials. And in doing so, we could take a really interesting leadership opportunity and grab that and use that to tell a totally different story and compete on a totally different vector than what the rest of the industry were doing.
Expecting to see a sudden increase in prices, but come the winter, particularly after November, 1st of November, the SPR stops. The market is going to tighten up very, very quickly. So we still maintain our forecast of over $120 by year end.
And Marita's had an extraordinary discussion there, and we heard that from a couple other people yesterday of really repricing and saying, forget about the pullback in oil. Yes, 80, 90, we're there, and then with demand, we will get back to 120. Lisa Bremitz, I thought that was really extraordinary yesterday.
Especially with the idea that after the November Party Congress in China, there could be a relaxation of zero COVID, adding to demand at a time of incredibly tight supplies and cold months. How much does that remain the base case, even for the likes of Goldman Sachs, which ratcheted down their near-term forecast for crude, but kept their longer-term forecast?
They kept, Kaylee, the fact is Jeff Curry kept 2023 at a 120 level. They're really pushing back against Ed Morris at Citigroup.
Yeah, and it really comes down to not just the supply constraints, but the demand one as well. China, obviously a factor in that as well. But if you believe that this recession may be shallow, that demand is actually going to prove resilient, and you still have restricted supply, that's going to keep prices elevated for some time to come.
On data, the markets have pulled back here off the news from Russia. The Druzhba pipeline, the largest pipeline in the world. This is the venerable pipeline that stretches all across Russia, and one leg of it through Belarus and Ukraine has been shut down. Oil moved immediately up $1.97.56 on Brent, worth watching. And as Lisa mentioned, even equities in the U.S. pulled back from flat to a little bit down. Futures -10. We get lucky because Kevin Book was previously scheduled, head of oil research for Clearview Energy Partners. It was to be a nice, lovely discussion of climate change and Biden legislation. Forget about that. We need to rip up the script, Kevin, and we can do it with you. These pipelines, we talk about them in the media like, they're out there somewhere, but they're absolutely critical backbones to the continent of Europe, aren't they?
Oh, yeah, Tom. Good morning. Good to be here. The pipelines going west from Russia are the critical link to energy security in Europe. And a lot of the energy security planning that's going on in Europe right now is watching this, not only for the oil story, which I think we'll talk about first, but also the read-through to what it means for gas. If there's supply getting cut off in one stream of flows from Russia, what does it mean for another? Russia's willing to flex its energy muscles against Europe, and this could be a sign of that.
Kevin, how much is this already priced into a market that is being hit very much by a decline in demand that's perceived by the slowdown in economic momentum?
Well, Lisa, a couple of things here. First, I think we should probably think about the Iran deal on the horizon too. Some downside travel to crude in the last week could be linked to that. That still seems like it's tracking towards maybe the closest it's been to a yes in a while. Demand as well. We probably may want to look at the numbers that we see on the monthly basis from the EIA more than the weekly numbers. It's possible demand's not quite as weak in the biggest consuming country in the world as it has looked in recent months. But as far as the Druzhba pipeline southern leg, we're talking about 300,000 barrels per day, maybe 350,000 barrels per day of supply missing from the market at the maximum out of about the 750,000 that travels over the whole pipe. So in terms of magnitude, the Iran deal could bring roughly 2 to 3 times that upside in supply to the market.
How much is this something that is going to be an on-again, off-again kind of transition throughout the rest of the year and beyond, with Russia kind of halting and then putting back on some of these gas and oil pipelines? I mean, how much is that basically a base case that in your view, has not been priced into the market yet.
In our view, it has not been priced into the market, and there's a couple of dates to watch. One is tomorrow, which is the onset of the European coal embargo. Don't think that Russia's going to just sit there and say, oh, cut us off from our market, and we'll be happy about it. There's always a plausibly deniable pretext for the shutoffs. It's munitions found on the sea bottom in the Black Sea for the Caspian pipeline terminus at the marine terminal there. It's because there's ruble payments that aren't going through for gas. And now it's payment problems, according to the news reports I just saw, for Druzhba. But plausibly deniable or not, the point is that when the West clamps down on sanctions on Russia, Russia clamps down on supply to Europe.
Okay, so as for how this is going to translate to the consumer pocketbook, Kevin, we have seen gas prices coming down every single day for more than 50 days now. Is that sustainable, or are forces like this going to drive them back up?
Well, there's a couple of things that go into those gasoline prices. One is the oil price, which is, if it's headed back up, going to affect gasoline prices to the upside. The second is refinery capacity running flat out has done a lot to bring inventories on stream as demand appears to have been weakening some. You get more inventories, the prices go down. But that could also change. At any given time, there could be refinery outages.
Kevin, you've got such an international reach here. Let's take the domestic expertise of Clearview Energy Partners. And there's comments on climate change and what we've seen with the legislation with President Biden and the Democrats in the Senate, and we presume in the House. But bring it over to Europe. There's a war going on in Europe. With the use of coal increasing, is ESG and climate change not dead, but delayed within Europe, and how much?
Well, officially the answer is no, and probably in the long term, the case for transition could never be stronger for Europeans who want to go that route. But in the near term, those molecules that are missing from Russia don't have electrons to replace them in Europe. And so the heavier hydrocarbon that you mentioned, coal, that's coming back on stream. In July, the German Energy and Climate Ministry put out its third update on energy security, where they basically said as of July 14th, they've got new rules in place from new laws allowing them to put coal from a strategic reserve back on the grid. So they're burning more coal right now.
That's what we love about surveillance, folks. We get lucky. We have this news out of Russia on a shutdown pipeline, the right guest at the right time. Kevin Book, thank you so much, of Clearview Energy Partners. Lisa, it's just amazing how our booking team does that. It's like, you know, they're channeled into Mr. Putin and what the next announcement is going to be.
I want to highlight something that Kevin said, and this is really important. It seems to be underpinning some of this news as I read more details about it. How much is Russia going to take out its aggression against sanctions from the U.S. on Europe by constraining oil and gas exports? And they basically are saying this has to do with an inability to pay, with an inability to really transact, and because of those sanctions. How much is that going to be the fall case for them increasingly as we head into winter?
Now, Kaylee, stronger ruble. There's three ways to quote ruble. We look at dollar ruble coming in a solid 1.16 down to 60.76. And that shows, again, the sanction battle with Russia and what they're doing. Of course, Kaylee, the discussions of Mr. Putin with Mr. Erdogan in the last 24 hours is part of the mix as well.
Absolutely. I think the strength of the ruble, the resilience of it since Russia invaded Ukraine back in February, Tom, has been astounding. The impact on the Russian economy just hasn't been quite as severe as you would have thought when the first round of sanctions were starting to be introduced. But of course, it goes both ways, right? You cut off the flow to Europe, you don't have that revenue coming in. So is it a question of just sending it other places like China?
American Oil, West Texas Intermediate, up fractionally, $91 a barrel, $6 spread. Brent crude, $98 a barrel. That gets my attention. We'll have to monitor that through the day. We're going to get back on track here with a study of the equity markets and, of course, this huge inflation report tomorrow. Tony Roth was something about everyone calm down. Futures and -9, the VIX 21.87. For John, the Dow off 10 Dow points. This is Bloomberg. Good morning.
markets count down in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming through?
There was something of a grey zone battle between Taiwan and China.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. To the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
Yes, we're avoiding an imminent recession, but we've got to look at what potential growth is going forward.
You've got that strong dollar, you've got a Fed tightening, and you've also got a global economic slowdown.
We think we will indeed see that slowdown. We don't think it's going to be all that far away.
The economy is going to slow, but it's not going to slow so much that you're just going to see demand fall off a cliff.
I'm definitely not in the soft landing camp. I think we pushed too far.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. A must-watch hour for you. We're going to start strong on the dynamics of the equity market. Lisa Abramowitz, it is, I don't know, a bull market, a bear market rally, whatever. It's unloved, isn't it?
It's unloved to the biggest degree potentially in history as far as the divergence between some of the bearish views and what we've seen in the market. However, today not cooperating with that, with a sudden shift in the market tone on the heels of that headline about a pipeline from Russia to Europe getting suspended in terms of the oil imports. How much does that change the landscape after we've really ridden on this decline in gas and oil prices for the past couple of weeks?
Brent crude up a stick 97.80 right now on Brent crude. We'll have to monitor that very carefully. Kaylee Lyons, you know, we're really getting towards where we dive into this inflation report. Let's summarize it right now. The gross look at it is the top line number and the core number, and I hear the pros talking about the core number.
Right, because on the headline, gas and food, those prices, which we know are more volatile, should in theory have come down as we see prices at the pump lower and food costs moving lower as well. But it becomes about those stickier components of it, what is contained in the core, because ultimately that is going to decide how quickly the Federal Reserve is going to be able to take its foot off the gas pedal. As you now have Citi talking about potentially 100 basis point rate hike in September if inflation is still hot and the labor market looks as resilient as it did on Friday.
And Lisa, the bond market, and I guess we go to 2's10 spread as well. What's the spread away from the vanilla spread, Lisa? 2's10s at negative 45 basis points. What's the spread you're watching?
I mean, it's inverted all across the board. What I was watching for a while was the 3-month 10-year spread, which had actually been widening for a while and then contracted violently at a record pace. And this was one area that the Fed looks at themselves and they were saying, look, it's not inverted, we're all fine. And now it's getting closer to that point. All of these indications, just for the big picture view, are saying there is going to be a deceleration and possibly a downturn. The jobs report didn't confirm that.
Yeah.
Some of the earnings have not confirmed that. So how do you parse that out with the pessimism of a Fed that is forced to act to curtail inflation, regardless of whether the economy wants to cooperate right now?
I'm going to do the data check now so Lisa can wander over to the briefing board because there's a lot to brief on, frankly, folks. And for those of you on Bloomberg Radio, I really can't emphasize enough how things come up on TV in a banner form, and I'm just absolutely stunned to see the 2's10 spread at negative 45 basis points. This massive and rapid inversion is really extraordinary. The 10-year yield, 2.79%. The 2-year yield, 3.23%. Red and green on the screen this morning. I should mention the dollar churning is the way it is, and of course oil with the Russian news, a big deal. And Brent crude reaching out 97.89 right now. We'll watch that global, that more continental Europe price of Brent crude up $1, one now 91.77 as well. We need a complete briefing. We do that with Lisa Abramowitz.
Thank you, Tom. I would say the most underrated economic data point of the week is going to be this one at 8:30 a.m., and that is U.S. non-farm productivity for the second quarter. Productivity is a measure of how effective people are in their jobs, and what you are seeing increasingly is people are getting paid more because of inflation, but producing less for a variety of reasons. You saw that last quarter, and the expectation is for you to see it again. Typically, what that means is it means that later on there will be job freezes and then layoffs as companies try to trim costs because of that lack of productivity. That comes ahead of CPI tomorrow, PPI on Thursday, and University of Michigan consumer sentiment on Friday. Today, it'll be really interesting to see some of the discussions, particularly from the semiconductor chief executive officers. President Biden is signing the CHIPS and Science Act of 2022 into effect. At 9:30 a.m., we do have the CEO of Micron slated to speak with us after ratcheting back forecasts for their fourth quarter earnings. How much can we quickly bring some of this manufacturing online to curtail any additional disruptions? Really, I want to hear the mix of what kinds of chips they're making and what that means about where the demand is. And today is the tail end of the earnings season. We've had about 90% of these S&P companies already reporting. Today we get Norwegian Cruise Lines, Wynn Resorts, and Roblox. Norwegian Cruise Lines, from some Wall Street analysts, have been left for dead. Do we see some sort of rejuvenation, at least in some of their projections? Wynn Resorts, a real tea leaf into the consumer discretionary spending. And Roblox, Tom, I put that there after dropping 53% because, during the pandemic, that's what all the kids were doing, and then, not so much.
It's on my computer, and I don't know what it is. It's a kid's game?
It's on your computer. Yeah,
I don't know what it is.
It's a whole ecosystem. It's a metaverse.
It's an ecosystem. It's a metaverse. Wait, so is Bloomberg surveillance. Right now, and I've really been looking forward to this, Anna Hahn joins us, equity strategist at Wells Fargo. And what she's been writing about is what the pros write about, but is not done enough in the media, and that is short covering. Short covering is when you bet on something and you go, oops, I got that wrong, and you cover your trade to get out of your negative toned short position. Anna Hahn, what is the convexity of shorts right now? Are there more people that need to go, oops, I got it wrong?
Well, Tom, also there's the other side. Hopefully, if you shorted and it went your way, that's a good time to close out the trade. But I agree with you. I think in this context, what we've seen, especially with the rallies in equities, especially with that voracious risk appetite last month, it's more people going, oops, might have had that a little wrong, or the pain has become too much. They have to close that trade at a loss. So with that happening right now, I think it's a reflection of this surge we've had, this trader confidence with markets going higher, and potentially, if we are going to see that the economy can remain resilient, even in a tightening monetary scenario, it bids up that risk appetite. That's what we're seeing right now.
But Anna, how much does it just mean that the Fed is going to come in and bring the sledgehammer to all of this enthusiasm and say, guys, you're not cooperating with us. We have to tighten financial conditions. And meme stocks are on a tear and everyone's just getting excited again. How much is the Fed going to stop it if it does go too far?
Well, the interesting thing about that, Lisa, is the Fed here might actually take that in a way to be more confident about continuing to hike at a breakneck pace. When equities shake, equities being such a large part of our household wealth now, that means consumer spending power also gets weakened, and that can put the economy into that snowball effect of contracting faster than was intended. But for the Fed right now, it actually might be easier for them to continue to attack or at least try to bring under control this inflation issue while consumers maintain somewhat of a slowed down but still spending so the economy can get through this. And in a way, maybe that's part of what's also built some of this confidence into the market and why equities are grinding higher despite concerns about recession. We're still seeing positive news that perhaps equities can still go higher in a tightening environment.
Well, let's talk about where that leadership would be coming from, and especially in the context of the inflation data we're set to get tomorrow, Anna. If it's hot, if it's cold, what does that mean for growth stocks?
That's a great point. I think that if it's sort of inline or cold, it's going to be a further boost for growth stocks in the sense that perhaps yields cool down in the front. Maybe we'll see a little bit of the front of the curve come down a little to match more expectations. But at the same time, if it comes in hot, if CPI, particularly core CPI, surprises the upside, for us here at Wells Fargo, we expect a little higher than consensus, but even higher than that, I think you're going to get, again, these recession fears stoked. And in a time where you expect the Fed needs to play catch up and potential for recession to come faster or not as shallow as hoped, that's going to put growth even more valuable in that sense and want people to add growth exposure to their portfolios.
Anahan, tell me what the physics of quality is. Everybody's tossing around the word quality now like they know what it is. What is quality to you?
For us, there's a lot of ways you measure quality, but Tom, I like to look at kind of a multi-factor approach here. And a large part of quality can be really the ability to do return on equities, on stewardship of capital, of cash, but very importantly as well is leverage can be a big aspect of quality. What's interesting is with this tightening environment, you tend to see credit spreads widen. You see credit becomes more expensive. But in the last 6 weeks or so, you've seen credit compression. And usually in credit compression, being in low quality is not as painful. But I don't know how long that's going to last. And that's why for us, rather than go into the low quality approach, we liked a more high quality or neutral, but particularly down in the small cap world, we think that it's not expensive to be in high quality, and we would prefer that.
Anahan, brilliant. Thank you so much, particularly there in short covering, which I think is misused by the media. Anahan of Wells Fargo, always brilliant. Lisa, I need to wander back to oil. I hope you'll go with me. 98.01, up $1.40 on Brent crude. Lisa, there's a gap to fill. There was a jump down from 110 down to 103. So oil, just, you know, if you're a chart guy, you got to go 104 is where we're going.
Well, what I find interesting is how thinly traded these markets are right now, and the lack of liquidity more broadly, and how quickly things can turn. Because this is one headline, we don't have a lot of details, and just the suggestion of it is causing a wholesale shift in the market to a more tentative tone. And to me, that highlights the August moment that we're in a time of great uncertainty, that one headline can really shift perception before we have any more details.
Well, it's the lack of liquidity out there. Kayla, you've written on this. What is the lack of liquidity? Did you see that like in the bond space where Lisa is, where there's no bids on a given corporate bond, or do you look at liquidity as a different way?
I think it's across asset classes, Tom, because as Lisa says, it is August. Liquidity just in general is thin, which is why so many of these moves in the market seem more pronounced. I just want to bring up a call we haven't talked about yet. Marko Kolanovic, the ever bull at JP Morgan, actually saying it's time to trim back on stocks, which is something he very rarely says, but to do that in order to buy commodities, because commodities have lagged other risk assets to such an extent over the last month and a half or so. And clearly we're seeing commodities, oil specifically, playing a little bit more catch up this morning, Tom.
Bloomberg Commodity Index 60 to a double 130, and it pulls back a modest amount. Kolanovic suggesting maybe now's the time to find commodities. It is never boring. Coming up, Brett Schutte will join us here on the allocation of his portfolio. This is Bloomberg. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. A stunning development involving former President Trump. Federal agents search his residence at Mar-a-Lago in Florida as part of an investigation into whether he took classified documents from the White House when he left office. The former president said in a statement that FBI agents broke into his safe. He says he's being targeted to derail a potential run for the White House in 2024. The U.S. has announced another aid package for Ukraine. There will be $4.5 billion in additional direct aid and $1 billion more in military aid drawn from existing Pentagon inventory. The military package includes artillery, ammunition, anti-tank weapons, and medical vehicles and supplies. And Taiwan's accusing China of using the visit of House Speaker Nancy Pelosi as a pretext to hold war games in the region. Foreign Minister Joseph Wu says Taiwan is concerned that China will invade. He called the Chinese military maneuvers a violation of international law. Meanwhile, Taiwan responded to the Chinese drills by holding its own live fire exercises. They took place on Taiwan's southeastern coast. In Seoul, South Korea, one of the heaviest rainstorms in 80 years has killed at least 8 people and left 6 missing. The storm flooded streets and subway stations in the capital and caused blackouts. More rain is forecast through Thursday. Semiconductor giant Micron Technology plans to invest $40 billion through the end of the decade to build memory manufacturing in the U.S. The company says the investment will create up to 40,000 jobs. Micron will join the list of those seeking government subsidies from a new law that President Biden will sign today. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Is the chance of humankind to really understand itself. How much of that is true? How confident? Did you actually overachieve? Did you, back then realize that we would be using AI in many different jobs? Was it slower or faster than you thought at the time?
I think if I had a 35 or 40 year prediction task, I would have been more or less on track as to where we are today. But I would have predicted steady linear increase over time. But instead, the field had very minimal improvements until the last 5 or 10 years. Then it really took off. I think we ended up in the right place, but I was very wrong about the trajectory. To this date, we still know very little about how the brain works, but these machines are getting ever more powerful. And I feel in some sense, we did end up learning what human intelligence is by learning what it is not. If we exclude all the things machines can do better than us as what makes us unique in our human intelligence, then now we can rule out many, many things, because AI or machine learning has become so good at so many things that what's left must be the key aspects of human intelligence.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I think that the business is evolving to have much more customization on clients' portfolios, and that's a good thing, but it's a challenge to kind of move into that mode.
Big Tech reports earnings.
Another big day. Apple, Amazon crushing it.
Bloomberg brings you the headlines first.
Revenue growth falling for the first time.
Missed on every top and bottom line metric apart from one.
This really is a story of strength.
Plus, expert analysis to keep you informed.
We've been waiting for this. The fact that they're not profitable is concerning.
Is this a company that indicates maybe a recession is coming?
We think it's going to be a major bounce back coming in next year.
Nobody covers tech earnings like Bloomberg, your global business authority. Wall Street prepares for the latest read on inflation.
We're all pumped for a happy CPI day.
Will headline inflation ease as expected?
If you get something that comes in much lighter, this rally that we're seeing, we think it will continue.
Instant reaction on Bloomberg Surveillance.
That headline CPI figure.
That's going to be a scary number.
That is an upside surprise.
And what it means for the Fed.
The Fed is not about to pivot.
Powell is willing to push this as far as needed.
Inflation in Focus, Wednesday on Bloomberg.
You have so much of the supply chain really that does move through the Taiwan Straits. And when we look at this and revisit what the precedents are, 1995, 96, when you had these kinds of tensions, you had a financial market sell-off, but not that much impact to the real economy. Now the economies are much more integrated.
Joyce Chang, Chair of Global Research at JP Morgan there on China, on the broader Pacific Rim. She was also really quite good on fiscal and the state of America's budget as well. You can see that wonderful report from JP Morgan, of course. Right now we're going to drive back to what is only one story in America today for our international audience. America wakes up shocked and galvanized about a search of President Trump's residence in Mar-a-Lago by the Federal Bureau of Investigation. Our Joe Matthews briefed us this morning and needs to brief us again here. Joe, Gary Abernathy writes in the Washington Post, and it's a sort of a rambling essay about comparing Mr. Mueller of time gone with Mr. Garland. Do you presume that anything that we will see from the Attorney General will be through the courts this time and not through congressional hearings?
That's a great question. What we saw yesterday would lead us to believe that is the case. But look, we may not find out what they were looking for some time. The two big questions we all have this morning is, what were they looking for, i.e. what did they find? And also, what might that result in terms of any criminal charges or investigations or otherwise? Of course, we can't answer the second question without answering the first. This is a months-long operation that's been going on here in a violation of the Presidential Records Act. But Tom, you know, we've seen the National Archives go back through materials like this in prior administrations. We've never seen a search warrant executed on the scale that we saw yesterday. And so, you know, it's got a lot of people wondering what exactly Merrick Garland knew, who exactly approved this, because a judge would have to see specifically what they were looking for on the presumption that it was on the premises. But Tom, I'll also offer, because everyone's asking, well, when are they going to tell us what they found? The FBI or the DOJ may not tell us anytime soon, but look, they served a warrant. That means Donald Trump likely knows what they were looking for. We heard about this raid from Donald Trump. He could likely tell us this morning what it was they were looking for. If this was such an overblown deal, an abuse of power, then tell us what it was.
Joe Matthew, describe the independence of the Attorney General from the President of the United States. This is storied in our lifetime, from Robert Kennedy and his brother to John Mitchell and what we saw with Richard Nixon. How do you perceive the independence of the Attorney General from 1600 Pennsylvania Avenue?
This is something that this administration has made a big deal about. Looking back on this is how they, say that they're different than the Trump administration was, when you had Donald Trump pressing attorneys general, plural, to pursue different investigations that he thought were worth their time. In this case, the White House found out about it supposedly on the news. The fact that the White House was not tipped off about a search warrant being served at a former president's home, something that's never happened in American history, is quite incredible. But it does serve, if that's true, the story that we hear from this White House, and that is one of complete independence. Tom, it's kind of like when you ask cabinet secretaries about the Fed.
Well, Joe, I love the reference. However, to that point of the independence, a lot of people are saying this timing is actually really bad for President Biden because he wants to talk about all of the legislative wins and the gas prices coming down. Do we have a sense of what urgency there was to take that time and do this now amid all of this other political action?
I don't think so. Again, there's so much that we don't know here that it's impossible to answer that. But look, I think to your point, Donald Trump will raise money on this. His supporters will as well. members of Congress who support Donald Trump, like Marjorie Taylor Greene, Matt Gaetz, they're tweeting, defund the FBI. This is going to be a new cause and an easy one to make with the CPAC crowd, with a real kind of aversion to federal law enforcement. But you're right, for Joe Biden, he's signing the CHIP Act today. He's got semiconductor CEOs at the White House, some of them talking to you here on surveillance. That was actually the story that this White House wanted to tell today, not a search of Donald Trump's home.
Well, Joe, it strikes me that we're having a conversation really about the state of American democracy when you have a former president's home being searched in unprecedented fashion at the same time that the U.S. is trying its very best to defend democracy in Taiwan, and yet things are getting much more tense, and that is becoming much more difficult to do so as you see China ramping up its activity around the island. What is the U.S. policy stance at this point into how it would like to respond to China's behavior?
Well, they've gone out of their way, Kaylee, to say there is no policy change. They were very deliberate to say that during the period of time leading up to and during Nancy Pelosi's trip. Nothing to see here, no change in the one China policy, precedent for this trip. But what we've seen China do is essentially prove to the world, including the United States, that it can sew them in. It can blockade that island without invading it and essentially make it, leave it cut off from the world. That would have massive economic effects here in the United States, as I'm sure you'll discuss with your semi-CEOs today.
Look for a 3-hour discussion on Sound On with Joe Matthew tonight, the news flow out of Washington. Just absolutely extraordinary at 5 p.m. on radio here as well. Lisa, let us get back to this inflation. We've had such news flow this morning. We've barely talked about the guesstimates of inflation. And to me, the biggest option here is core inflation. I mean, we don't know.
So there are a number of really interesting data points that came out yesterday. There was a Cleveland Fed nowcast that came out, and some people would argue that it indicates a higher headline CPI than currently estimated by Wall Street analysts. The Wall Street consensus is 8.7%, and what a lot of people are inferring from the nowcast from the Cleveland Fed is about a 9%. On the flip side, the New York Fed put out its routine survey of inflation expectations over the next 1 to 3 years, and they sharply fell. So you have real competing tea leaves on the ground in terms of the real-time data.
Should we have a nowcast at home, Lisa, on children's summer reading?
Absolutely not.
Should we have a nowcast?
You want someone
Kids,
tracking
let's
that?
have a nowcast
Seriously?
here. Are we on chapter 2 or chapter 3 of 14 chapters?
Are we in
I need a nowcast.
Yeah, are we in a dismal depression, or are we, effervescent about something exciting?
Who do we blame for this? Do we blame, Kaylee, do we blame the Atlanta Fed for nowcasts?
You can, Tom, if you're looking for someone to blame. But I think Lisa's point on the expectations coming down that we saw in that survey yesterday, that makes Friday's UMich numbers also very interesting after the inflation read we're getting tomorrow, because we know that the Fed is paying attention to those. So if those inflation expectations also come down, is that a good sign for Chairman Powell and co?
Well, we'll have to see. On the yield space, I mean, there it is. I mean, Lisa, it's just as simple as it can be. 3.24% on the 2-year yield. We haven't talked enough about that with a 2-10 spread. I mean, what do we do with a 46 basis point move? We're not there yet, but we're grinding there, aren't we?
And how can it come down? I'm talking about the 2-year yield. If you see robust earnings and if you see a consumer still willing to spend, something has to give.
Anahan and Wells Fargo tilting towards a more robust inflation than some others as well. Futures -9, Dow futures at -12. Stay with us. This is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
As you look at the company you've created, how do you think you're having an impact on the world for the betterment of the world?
We are by far and away the best positioned entity to solve the question as to what does the human genome mean and how can you apply it to individuals.
The markets count down in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Good morning, everyone. Bloomberg Surveillance, thrilled you're with us right now. Let me do a data check. I want to get into that because we really want to get to Greg Peters as quick as we can. Futures, -10. Dow futures, -16. They deteriorate. Really, the break here from a flat level down to some deterioration was a headline out of the shutdown of the massive Druzhba pipeline. This is in southern Russia over in 3 parts through Belarus and Ukraine that moved oil as well. Oil, $98 Brent crude now with a bid to it. There's no question about that. Dollar not giving me much action this morning in the bond market, which we'll get to in a moment, -45 basis points, which is really extraordinary. Let's get right to it on the equity space. Here's the bond expert, Bramo.
Thanks, Tom. Thanks for setting me up like that. Honestly, I've been watching one area with very close attention. The semiconductor space has been fascinating. It has been harsh, and it has talked about a lack of demand at a time when we still are talking about the resilience of Apple. We're talking about the resilience of big tech. So where do we get this sort of balance evening out? NVIDIA still falling after yesterday coming out and forecasting a severely curtailed income, missing their revenue estimates by about $1 billion in their latest report. Those shares down 2.8% ahead of the open. Micron also coming out and saying their fourth quarter estimates are going to have to be lower because of a lack of demand for personal computers and other devices. Again, this has been the story across the board. Those shares down almost 4% ahead of the open, and Advanced Micro Devices in sympathy also falling about 2.1%. On the flip side, this is the pain, this is the pessimism. On the flip side, you can find the optimism, all the optimism you want in Bed Bath & Beyond and AMC, because why? I don't know.
These are meme stocks.
Right, exactly. It is revenge of the meme stocks. Why? Go figure. Perhaps people actually are believing in this Fed pivot and think that that will give steam to some of these names. Bed Bath & Beyond.
Steam to the meme. I love it.
Just want to give you a sense. Bed Bath & Beyond, since the middle of June, has gained almost 90% if you take a look at how much those share prices have increased. So at what point are we looking at, Reddit trend lines, and that's the reason why? And what reason are people saying, look, these guys were left for dead during the freak out and are coming back?
Very good. Let us give a little history here on one of the great surprises of the last 20 years. They were those guys over in New Jersey, and in our childhood, they owned a piece of the rock, and they would show you Gibraltar, and they were Prudential, and that's the way it was. Prudential became PGIM, and with it, they became truly one of our best opinionated bond houses. These are buy-side people managing bond money, full faith in credit, investment-grade credit, which Lisa's expert in, and also, of course, distressed debt. But more than anything, they have done it with an opinionated elan that is absolutely second to none. Lisa, that includes the gentleman greeting us this morning.
Yeah, Greg Peters, Co-Chief Investment Officer at PGIM Fixed Income, who is joining us at a time when the one conviction in markets had been longer-term bonds and continues to be longer-term bonds. And you've had such a fascinating view on this, oscillating between conviction and not so much. Where do you stand on an area that has been a haven amid near-term concerns about inflation?
Yeah, so I think the bond market has just reflected the new reality after Russia invaded Ukraine, post-lockdown. So we have seen, and we're still experiencing, this inflation surge and growth surge. And the thing that I'm focused on, or we're focused on at PGIM, is, as like everyone else, the rollover in inflation. But I think that kind of misses the bigger question on the table is, so what's next? And, we were talking earlier, and I think the markets are entirely too comfortable with this notion where it's just going to be a straight line down, smooth and easy, right to the Fed 2% mandated zone. So I still think there's lots of room for volatility, lots of room for rates to move both higher and lower, and credit spreads to be much more volatile and wider on balance.
That's exactly where I wanted to go. This conviction that people have that the Fed will get to their 2% target, that you can see in that conviction for longer-term bonds. You can see this also in break-even rates that have actually come down as the Fed jawbones. Do you expect that to change, that as we head into the end of the year and as people start to see a cooling off in some of the inflation data, you get less of an inversion in the 210 spread, and that ends up being bad for markets because that means the long end is increasing, yields going higher as people start to question the Fed's ability to get things under control?
Yeah, so it's a good question. I think that there's a high probability that the high-end rates have already been put into this market. A lot can change, so my conviction level isn't as high as it normally is, just given kind of the uncertainty and the volatility, the unprecedented nature of it all. But I do worry about that. But actually, Lisa, I kind of worry about the flip side of that, where once rates do come down, that markets get, or not rates, inflation rates can come down, the markets get too excited over that. And they're declaring victory in the middle of the battle. And I think that's where the whipsaw moment could really come in and hurt investors in a meaningful way.
Well, Greg, of course, it's not just about getting inflation down. It's what it takes to get inflation down. And there is this narrative out there that if the data is looking okay, looking resilient, that means that the Fed can hike aggressively in order to tame inflation and land softly while doing so. But is it actually, if the data is stronger, the Fed has to be even more aggressive in order to actually get a handle on demand and bring prices down, and therefore a hard landing is inevitable?
Yeah, that's kind of been my narrative all along. I always felt that this underlying strength of the economy, nominal GDP is really quite robust, which is why you're seeing actually earnings surprise to the upside, or at least not be as poor as many thought or asserted. So yeah, to me, the stronger the economy, and this is a very strong economy in lots of different respects, requires the Fed to do more, which in turn means the risk of a hard landing is actually higher, not lower. So I know it's a perverse way to think about it, but that's kind of the viewpoint that I have.
So if they have to do more, which is get the terminal rate to a higher level, what is your expectation about how long realistically they're going to be able to stay there before cutting? Because this market's still betting that cuts are going to come next year.
Yeah, so the cuts in the marketplace next year seem a little heroic to me. That's where I really disagree with the market. So, once again, it's about the path. And I think the market's extrapolating the straight line lower, 2%. And my strong suspicion is that you're not going to move in a straight line. And so those cuts that are being priced in the market next year are unlikely to be fulfilled in my mind.
So, Greg, given the lack of conviction about a specific trade that will be consistently a winning trade, and given your expectation that there is going to be more spread widening, where's the haven trade? Where's the ballast when you start to look at investments?
Yeah, so I think it's about relative value, kind of risk-neutral type of themes. And so one of the themes is actually Europe over the U.S. So, we look at investment-grade corporates, we see a lot more value, even with kind of the move tighter here in Europe than the U.S. We see a lot of value in high quality structured products. These are assets that should do really well in an environment that, with heightened hyper recession risk, and basically playing the front end of these credit curves. So if you believe that these investments that you have will be quote unquote money good, will not default, then mining that front end is an area to get roll and carry, as we like to say in fixed income.
Finally, Greg, obviously CPI tomorrow, 8:30 a.m. Eastern time. The print is hot. What happens? The print is cold. What happens?
Well, so I think it's, the market's setting up for a lower print, at least kind of in the whispers. If it is hot, I think that is a decided risk off a type of environment. And if it's at or below, I think we continue to grind here through the course of the summer. Just one caveat I'd like to make, though, is, August is a period of time where there's not a lot of informational content coming through the marketplace. Liquidity is much more thin. A lot of investors are, taking their mandatory 2-weekers. And so let's not read too much into what happens here over the next couple of weeks. I think September we'll get a much better read on really the market, true market direction.
Greg Peters, thank you so much. Greatly appreciate it this morning. Greg Peters with PGIM there as well. Lisa, I'm following the news flow out of the shock of this search of the former president's residence. And I want to make clear, and Bloomberg has this reporting. Hani, thank you so much for this, for bringing it up to date. And it seems to be, Lisa, a trail of the New York Times and Bloomberg, and I'm not sure that timing, out to NBC moments ago saying that the search was very much centered on materials of the National Archives. The National Archives, of course, Lisa's much more than when you walk up those monumental stairs and look at the USS Constitution. It's about the records of our presidents.
Yeah, and we'll get details, I'm sure, trickled out. Whether we get a full report from the Department of Justice, still unknown. Also unknown, and this is interesting, Joe Matthew was talking about this, the urgency. That typically the Department of Justice would need to have some sort of urgency to do it now. And what would that be, right, as they go on with some of their other investigations, particularly that we've heard from Capitol Hill?
I mentioned this for an international audience, Lisa. I mean, the Attorney General always has a unique position within the cabinet. But one of them has been what I would call sort of a collegial visibility, where they're sort of, as a general statement, they're out there, they're visible. Can we say that about the President Attorney General?
I think that there will be a lot of discussions historically of how to place this. The significance of it is that it is coming at a time, as Joe was talking about, that President Biden would like to be taking a legislative victory lap. And now we're talking about...
Oh, what a distraction. Yeah,
that's
absolutely.
exactly it. And so heading into the midterm elections, the Democrats had been gaining steam when it comes to maintaining the Senate, at least by polling. And then, how much does this distract and take air out of the room at a time when there are a lot of different focuses?
And, of course, one of the great distinctions of Merrick Garland is he's a former judge. That's often not the case for the Attorney General of the United States of America. It is truly an historic day for America, and it's not an historic, I don't want to oversell it, but it's Inflation Wednesday tomorrow. Neil Tutta will help us out with Renaissance Macro. Futures deteriorate, -10. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Donald Trump is portraying himself as a political victim today, saying he's being mistreated by Democrats who don't want him to run for president. That's after federal investigators searched his home at Mar-a-Lago in Florida. It's part of an investigation into whether he took classified documents from the White House when he left office. The former president was in New York during the search. A new working paper from the St. Louis Fed says that ending emergency jobless benefits had a significant impact on boosting employment. That may underscore Republican criticism of a Democratic program. The federal government provided enhanced benefits during the pandemic. It increased eligibility to many of the unemployed who would not otherwise be covered. And Hong Kong said it had no plans to relax the stamp duty on home purchases. That followed comments on Bloomberg TV from a top government advisor that it was among policies being considered to shore up the economy.
Mainland residents, mainland professionals, they have been clamoring for the double stamp duty to be waived for them. even before they acquire the right of abode. We have received a lot of requests in this direction.
Will you do that?
I think the government would, well, it's all a raft of measures are under consideration.
The comments triggered a rally in local developer shares. The stocks pared gains after the government said it didn't plan to reduce property taxes. And the Pentagon estimates that as many as 80,000 Russian soldiers will have been killed or wounded since the invasion of Ukraine. It's the first time the U.S. military has announced its estimate of casualties. In March, Russia said more than 1,300 soldiers have been killed. It hasn't released any numbers since then. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
Inside the boardroom. Let's suppose you win a proxy fight and/or you just get invited onto the board. You go to your first board meeting, and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we presented with the plan.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. MasterCard is building on its core business, branching out into new products and services. It's up to CFO Sachin Mehra to ensure this growth strategy pays off.
The key to being successful in this kind of environment is to have a diversified portfolio.
Chief Future Officer, Wednesday on Bloomberg. Brought to you by Workday. From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays, this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA. Which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Is that global slowdown
that are supporting the dollar despite the fact that the U.S. economy is slowing as well. And that's the mistake dollar bears have been making. They've been saying, hey, the U.S. economy is going to slow, the Fed are going to have to slow, the dollar is going to slow. But the reality is the dollar does well when the global economy is under pressure.
Dara Mayer representing HSBC, and no one has been more resilient, strong dollar than HSBC. They've hit the ball out of the park on that call for the last 4 or 5 years, and he really reaffirms how difficult it will be to see weak dollar. Right now, futures negative 16, they deteriorate. Some of the catalyst here was oil news out of Russia, with oil up a stick larger. Brent crude 98 to round it up, $98 a barrel is worth watching. And Lisa, we got to go back before we drag ourselves over to Dr. Sassower to the 210 spread. I'm sorry, negative 45 basis points, and every ability to be more inverted.
And what is the ramification for a Federal Reserve that has to hike rates to such a degree based on longer-term expectations? That is part of the unknown. What's the lag time before we start to really feel it?
Yeah, the lag time is to define how many islands you can meet in Greece. Damian Sassower joins us, tanned and rested right now, Chief Emerging Markets Credit Strategist in charge of Athenian Islands. You know, I look here at the emerging markets, whether it's Greece or any of the others, and I say, in the pro business, you partition them and you focus on a category. Which is the group of EM now that our audience really needs to focus on?
Well, those with high debt to GDP, right? And, you know, Kenya comes front and center here just because of the elections. And as we know, Kenya has a history of having a bit of social unrest around these elections. So it's actually a good thing to see that we're not seeing a lot of that.
Is it an EM economy or a frontier economy, well, even more remote?
Those with debt to GDP well above 70%, like Pakistan, El Salvador, Kenya, Ghana, Tunisia, they're all facing trouble and they're all living out along the frontier. So those are the ones that obviously come front and center for me. They've all rallied pretty big on this move over the better part of the last 2 weeks. I'm talking their dollar bonds. But for me, my goodness, I think there's more pain to come. The real question for me is what's interesting is how the street has completely underestimated the U.S. Treasury's ability to trim its borrowing. And so you're not seeing them crowding out other asset classes, right? We thought that spreads would widen. I personally thought spreads would widen far more than we've seen because you would see a lot more Treasury issuance. We're just not seeing that yet. Whether that changes, and obviously it's probably due to the tax revenues due to unemployment being at the lowest since 1969 here in the U.S. And so, you know, they don't need to borrow as much, but, you know, how long is that going to last? The verdict is still out, Tom.
There's still one area, Damien, where you are seeing some pretty significant spread widening, and that is Chinese junk bonds tied to home developers. And this comes as China ordered a surprise audit of the $3 trillion trust industry, which is one of the financing mechanisms for a lot of these kinds of home loans. How much are we watching a slow motion train wreck when it comes to the housing market of China that they're trying to kind of manage, but also allow to a little bit more freely float?
Well, I mean, it's a $200 billion market. I'm talking about high-yield China debt, and it's off the reservation. I mean, Lisa, it's uninvestable at this point from my perspective. And I think really when you talk about the trust industry and how they've repackaged a lot of these developer obligations, property developer obligations in China into investment wealth products for high net worth or for local Chinese households to own, yeah, you know, that's $70 billion that they need to basically make payment on before the end of this year. $70 billion that these property developers need to pay the trust companies. Good luck on that one. So, you know, I think a lot of these trust products are going to feel the pain here. Certainly, I think an audit is warranted. I think it's quite frankly far overdue.
Yeah, and of course, the subject of our big take story out on the terminal today, Damien, is the Chinese junk property debt market and how it basically is all but dead. Why isn't China doing more about it?
I don't know how much they really can do, right? I mean, the reality is what they're trying to do, and what they're doing successfully is trying to limit the contagion from spilling over into the banking sector, right? And so ICBC, BCom, you know, all of these banks are being encouraged to lend to property developers to help bail them out. But really, at the end of the day, right now, it is the trust sector that's been bailing them out, that's been taking over these unfinished properties. You know, in China, you know, you pre-finance your purchases of homes, right? So, you know, they basically are pre-funded and the homes are not yet ready. So it's up to these trust companies to finish the development. They're unable to do that. You know, SOEs are not stepping in. It's getting really bad. You know, you saw Logan basically restructure 5 of its dollar bonds. You saw, you know, Greenland basically, you know, they need a basically support from 2 large SOE shareholders. So there's more morass to come in China, and certainly the property sector is a place that U.S. investors want to stay away from.
How much will that bleed through beyond China, Damien? I mean, I remember when we first started talking about Evergrande, which feels like a million years ago, we were all talking about contagion. Are we still talking realistically about substantial contagion?
I mean, absolutely. And look, I think, for emerging markets writ large, it's been dollar yuan. And so for me, dollar yuan's now at 675. It's been weakening pretty considerably in the face of all that's going on. And I think, you could expect some more of that. You saw some pretty good data out of China. I'm talking about on the trade front. I think their trade surplus rose to the highest on record just this weekend. But the interesting thing about it is a lot of it is being driven underneath the surface by steel, textiles, but most specifically autos. And when I say autos, Geely and Great Wall China, the two biggest Chinese auto manufacturers, dude, their sales have doubled in Russia. Their exports to Russia are up 22% year over year. Russia-China trade is something we need to keep a close eye on.
How's Mexico doing? On the border, we haven't talked about it much. It's almost off the radar, it seems, within global markets. Give us the SASR update on Mexico.
Well, Mex peso over the long term should benefit from reshoring, right? You would think. But we just saw a massive inflation print this morning. They're going to raise rates on Thursday probably by 75 basis points to 8.5%, Tom.
Is that because of Powell? Did they have to, is that the power of the central bank?
Yeah, because they track the U.S., I think so, And so, you've got Mexico. Peru's probably going to raise by another 50 bips on Friday. So, you see the Latin American complex really raising rates, but if there's one emerging market you need to keep an eye on because we're ahead of the curve, it's Brazil, I mean, you'd be paying in the front end of every emerging market, but Brazil's one where you really have to be mindful of the fact that they were a first mover. They've tightened rates fairly significantly, and if there's one market you may want to receive in the front end, it would have to be Brazil. But
listen to you. What does receive on the front end mean?
It means you want to buy short-dated paper.
You want to buy 2-year Brazilian paper.
Less. I would say, 23s, 24s on the DI curve. That's the Brazilian futures curve, like the Eurodollar curve in Brazil. I'd say that's probably where you want to
see that, Lisa. We get a window into the land of SASR there. I have no idea what he just
Aaron Judge just hit his 44th home run.
That's just random association.
Can I get a Yankees update as a bonus round?
Okay.
Are they going to trade Judge? What are they going to do with him?
They got to re-sign him. Well, I mean, all this talk about Soto and the Muse signing him, I mean, Judge would have been very upset, I'm sure.
The Padres are batting 130 or something since they got Soto.
Have you watched The Captain? Have you watched the Derek Jeter documentary on ESPN?
I have not. You're the 15th person who said I should. I'm
phenomenal.
a big fan, actually.
It's really, really good. You have to watch it. Yeah, no, I mean,
I was honored to speak to him when he was a Miami, whatever they are.
Yeah, whatever.
That's good.
Nailed it, Tom.
Who booked SASR? Can we look? These interns don't understand. I mean, NYU. Can you understand? We don't book Yankee fans. Okay, thank you.
Chicago, Virginia. Please tell us.
No, I don't know. I don't never remember their names. I just name them by their school. There's like Northwestern and
Vanderbilt.
NYU and Vanderbilt. Well, we take kids from Vanderbilt, but they,
Yeah, they act out a little bit.
They act out like you. They act out a little bit. Yeah. Lisa, help me here. Damien
we're still on TV. Did you know that? We're looking right now at the losses that are deepening with the NASDAQ down 0.7%. And this really does come on the heels of that oil headline with respect to that Russian pipeline. How much is that really going to really dovetail the position? Yeah, go ahead. You can keep talking with Damien about your teams. But really, I want to see how much this sticks, especially into the close after yesterday's reversal. From New York, this is Bloomberg Surveillance.
I think we need to think differently about, being enough.
I think, in number of different respects, I think, we're trying to either prove ourselves or do too much. I think we have to realize that, as Black people, despite what society says about us, despite, what happens, we are enough. And so I think going forward in that headspace, I think is really important.
I think the pandemic really highlighted the importance of financial literacy. In that, it's so important to understand, okay, like how do we budget? How do we plan for, unforeseen circumstances and really make sure that we're prepared for these events in the future. And through Blackstone Capital, that's why we really place a big emphasis on financial literacy in all forms, budgeting, retirement, investing, etc.
What motivates you guys to do this?
I think it's honestly the impact that we've already seen. It's something that we just want to keep going because we've seen students come in, learn everything that we teach them, and get really successful jobs on Wall Street, really change their trajectory, their career path. And so if we can keep doing that for the next 100 years, that's something that's satisfying for me.
The markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short term.
Bloomberg Markets, The Close. Weekdays on Bloomberg. Bloomberg's covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, today on Bloomberg. No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
There was something of a gray zone battle between Taiwan and China.
Where are the job cuts to come from?
We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Look, it's just clear that the Fed has a lot more work to do.
They're behind the curve still. Inflation is still by far our biggest problem.
Everything we're hearing from the Fed is be patient. We want to see the numbers on inflation. We need them to come down.
We feel that the Fed can probably do its job and get things done in terms of bringing down inflation.
I think by the end of this year, we're not talking about inflation anymore.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It's Non-Farm Productivity Tuesday from New York City for our audience worldwide. Good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio. Tom Keene, John Farrow, and Lisa Abramowitz. John off for the entire week, not just today and yesterday. And Kaylee Lyons very much in the seat. We appreciate it and happy birthday. Tom, I do want to get a sense of how much this is a data-dependent market. We see it's a data-dependent Fed, at least what they're saying, even as they give a lot of forward guidance. However, we are seeing each data point really move the needle.
And what's important is beneath the headline data, it never has mattered more, and that's what we're going to do today with productivity and all its complexities. But Lisa, I would really take it to tomorrow, where we've really got to parse out the inflation data, not just look at the headline number.
You made a great point earlier, Tom, where you were saying that the non-farm jobs pay number that we got on Friday was kind of game-changing, and I would agree. What I've heard from a lot of analysts was it confirmed this idea that a recession was not imminent in the economy. How much does that CPI print potentially end up being game-changing as well if it comes in not lighter than expected, but hotter than expected?
It can be either way, and we've seen those two different opinions from our guest, Brent Schutte, to join us here in a moment, will no doubt weigh on that as well. But what's interesting to me is not so much the makeup of core in headline, but Lisa, the makeup of the service dynamic versus the goods dynamic, and the major surprise to the optimist may be goods disinflation.
And that's what a lot of people were kind of expecting, this sort of roving inflation. I keep going back to that because it's not sticking in one place. It's going from sector to sector, maybe moving away from washing machines and going toward rents. But Kaylee, how much are we seeing that in some of the dispersion in earnings? Because we've seen almost 90% of S&P companies report earnings, and it's been all over the map in terms of the optimism or pessimism, but overall resilience is the word.
Resilience, or at least less bad than feared, which doesn't necessarily make it great, but at least it's something, and that has provided somewhat of a ballast of support to the equity market. But you have plenty of people, Mike Wilson over at Morgan Stanley, David Costin at Goldman Sachs, saying looking forward into the rest of this year, that margin pressure is going to come in as you look at producer price inflation. That, of course, we'll also be getting later on this week, and that continuing to be a persistent pressure. My question, Lisa, is if inflation is still running hot and the labor market is resilient, doesn't that just mean that the Fed has to be even more aggressive in order to actually get demand down? Does that mean the economy is too strong so their policy doesn't have as immediate as an effect?
And that's what Greg Peters was getting at, that he doesn't buy this idea that the Fed is going to be able to cut rates next year because of the intransigence of this inflation. But Kaylee, give us a sense of how good or how bad the earnings were. I mean, how much is Mike Wilson's view a faith-based view on what's to come rather than on-the-ground tea leaves now?
Well, the backwards look was okay, right? You had most companies beating expectations on average by about 4.4%, but we have to keep in mind that a lot of that came from energy, because obviously energy companies have just been blowing it out of the water in terms of profit. If you X that out, earnings have actually been down, not up. So that's something we have to consider.
And Tom, talking about oil prices, they are up about 1% on the heels of that headline, very much driving a lot of the action that we're seeing today with the declines that we're seeing in equities continuing to deepen as we move ahead in this morning.
Up a stick on Brent crude back to 98. We've ebbed off a little bit in the last 20 minutes, but I would put it in the category, Lisa, it bears watching.
It bears watching, especially because it's a reversal of the trend that we've seen. How much is that what's underpinning the optimism, the decline in gas prices, and this fact that we have seen a cooling off in oil, which is one of the major components for a lot of the headline CPI prints? Right now, let's turn to somebody who's been tracking this all from the wonderful city of Milwaukee, dear and near to my heart. Brent Schutte, CIO of Northwestern Mutual Wealth Management, talking about the potential optimism or not heading into the rest of the year. You think a recession is already baked into the price. What makes you confident about that, given the resilience that we have seen in the valuations?
Well, I mean, there's so many things to say here. I guess if you look at the 25% decline early in the year, I think that was the baking in of a mild recession. Everybody trotted out their graphs that showed that the S&P was pricing in a 91% chance of recession. I think that's priced in. Look, what's going to happen for the rest of the year is going to be determined by the path of CPI, period. Everybody does these historical analogies. They talk about earnings. I think you need to look at 66 to 82 if you're going to start making historical analogies. And each and every one of those times when CPI peaked, the market bottomed. And guess what? During the time when CPI peaked and the market bottomed, earnings actually peaked and rolled over. Think about the CPI comments that you just made, the PPI comments, the producer prices, the margin pressures. The most important thing you need to think about is CPI, and I do think that's peaked, and I think it moves lower in the coming quarters.
Brent, as you know, and you've been very good at avoiding the cliches, the mother of all cliches right now is to buy quality. We're in search of what that means. I have no clue. But what I do know is if I have a 3-year hold, a more cautious Northwestern Mutual view, I can parse quality growth versus quality value. Which is more attractive now, given a short term of 3 years?
Quality value for sure. I mean, if you look at value as a factor, it is as cheap as it's been historically.
Agreed.
And so if you think about value, I think about things like the S&P 600, which surprisingly to some is small caps, but it's quality small caps. Right. That has actually been the best part of the market this year. Not large caps, not mid caps, it's quality small caps and towards the value side.
Okay, but I need to interrupt. This is so important, Brent. Since 2014, we've had a partition where growth has reigned supreme. What is the catalyst for quality value to begin to catch up?
I just think the differences in valuation. Look, valuation is not a shorter term metric, but it's a longer term metric that tends to work. If you buy something cheap, you're paid over periods of time, 3, 5, and 10 years. You had an extremely odd market during the period of 2010 to 2020, where interest rates were artificially low. Earnings on the technology side were the only game in town. I think that's shifted. You just mentioned earnings in your opening with oil stocks and things of that nature doing a bit better. And think about the possibility for interest rates to continue to rise on the 10-year. Certainly, I do think the Fed is probably done here in the not too distant future, at least for now. But I don't think we're going back to a period of time where you wake up each morning and worry about deflation. I think it's quite the opposite for the next few years. And every economic cycle has had different leadership because it's unique. And so I think going forward, you should look towards quality value, just given the cheapness. And if you think about it, the economic environment will eventually shift. I think we're going to have a mild recession. There's another side to that, and we already have priced that in, I believe. And so when you think about valuation plus what's coming, I think from an economic perspective, I think you want to stay in in value.
All right, well, it takes two views to make a market, and Brent, you're kind of running contrary to what we heard from some of our prior guests, like Anna Hahn at Wells Fargo, talking about how growth is going to be a winner either way. Let's talk about whether or not you're finding value in the bond market. You just said, in theory, yields are going higher. Does that mean you don't want to be a buyer of treasuries right around 280 at the moment?
From the standpoint of what my clients need to hear, I want them to own fixed income because it serves a purpose in their portfolio, and it guards them against all the different kind of outcomes that could be adverse to what is actually our base case. And so they need to own those for their near-term liabilities. But from an outright perspective, I do think 10-year treasuries will find their way higher. I think people are going to demand a little bit more risk premium against inflation, against the unknown, to the upside. And so I think the term premium, which has been highly negative for the past 3 or 4 or 5 years, I think that has to move higher, and that means a 10-year treasury that I think goes back towards 3.5% to 4% over the coming year or two. Now, that's not a reason not to own bonds, but certainly I do find more value in equities at this point, especially those that are very cheap.
One thing that has been a theme through all of the guests that we speak to is a humility in the face of all of the uncertainty and a desire to be nimble. If things shift, if there is some sort of exogenous effect, or if there is some development that goes against their assumptions, how do you stay nimble? How important is that to you?
Yeah, I mean, certainly we want to stay nimble. We have an outlook. I don't think the opportunity for me is to try to out-trade traders. I think a lot of those people get on the show and talk about that. I manage individual investors, and I think they should focus more on the long term and have that as their anchor. But certainly we make shifts within the shorter term, and we do things like hedge. I talk about equities moving higher. We've owned commodities for the past couple of years. We owned tips. And so things like that are things that we do on the opposite side of the equation. So all of our oars are on one side of the boat in case an unexpected wave hits. And so I think that's important for any listener that is an individual investor to think more about how you have these different exposures more longer term, and then you can make shifts and changes around that longer term objective.
Brent, thank you so much. Greatly appreciate it. Brent Schutte, Northwestern Mutual Wealth Management, with us today. Futures negative 15, they divert. Dow futures negative 47, and the VIX out with a 22 print, 22.08. Lisa, Ira Jersey just publishes at Bloomberg Intelligence with a whole set of ideas on curve inversion. And to me, the word I use here is stochastic, Lisa. They go down, they invert, they're ugly, and they flip back. And Ira seconds that by suggesting that inversions don't last all that long.
How do they flip back, though? That perhaps is the more interesting aspect of this. Is it that people expect the Fed to cut rates or to hold off on some of the rate hikes, and that leads the longer end higher? Or is it the other way around, that people take a look and they say, okay, well, you can see that this is sort of steadying out in the short term. Long term, we might have more inflation than people are currently
Negative
assuming.
46 basis points on the 2s10. Lisa, I still can't get used to the idea I'm even saying that. A 0.46 percentage point difference. You get paid more with a 2-year yield than a 10-year yield?
This is a historic moment, and we can't say that enough. And when we start giving sizes and scopes, like the biggest inversion going back to the year 2000, we are dealing with a shocked economy that is dealing with near-term inflation. And the belief is that it's going to go back to 2%. And so that is what you're seeing represented in this yield curve. Whether the path to get there is pernicious and violent is something up for debate.
Quickly, Kayla, you wonder whether it will move tomorrow. I mean, does an inflation report move inversion?
I'm sure it will move the bond market as a whole, Tom, yes. The question is, if you get a hot inflation print, do you actually see yields going up because it means a more aggressive Fed, or is the expectation a more aggressive Fed leads to bigger concern about growth, and then we see the bid into the Treasury market? It'll be interesting to see how it shakes out.
6 basis point move on the 2-year yield, 3.26%. Stay with us. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. A stunning development involving former President Trump. Federal agents searched his residence at Mar-a-Lago in Florida as part of an investigation into whether he took classified documents from the White House when he left office. The former president said in a statement that FBI agents broke into his safe. He says he's being targeted to derail a potential run for the White House in 2024. The U.S. has announced another aid package for Ukraine. There will be $4.5 billion in additional direct aid and $1 billion more in military aid drawn from existing Pentagon inventory. The military package includes artillery, ammunition, anti-tank weapons, and medical vehicles and supplies. Taiwan's accusing China of using the visit of House Speaker Nancy Pelosi as a pretext to hold war games in the region. Foreign Minister Joseph Wu says Taiwan is concerned that China will invade. He called the Chinese military maneuvers a violation of international law. Meanwhile, Taiwan responded to the Chinese drills by holding its own live fire exercises. They took place on Taiwan's southeastern coast. And semiconductor giant Micron Technology plans to invest $40 billion through the end of the decade to build memory manufacturing in the U.S. The company says the investment will create up to 40,000 jobs. Micron will join the list of those seeking government subsidies from a new law that President Biden will sign today. Another sign that higher mortgage costs are cooling down the U.S. housing market. Last month, the supply of homes for sale across the U.S. grew at a record rate. According to Realtor.com, the number of active listings nationwide jumped 31% from a year ago. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
So the inflation environment has been changing a little bit. Inflation's been very low for 25 years. Now people think inflation's coming back. How are you going to deal with that?
I think many of the tools that we've historically used to battle inflation no longer work in the same ways they used to. I think people oftentimes thought of housing as a way, or especially retail and real estate as a way to hedge against inflation. Less and less possible the way we've invested in it. I think commodities similarly have been thought of as a way to hedge against inflation. There are challenges over the long term. Equities have been a hedge against inflation. We will continue to do what we have done in the past, which is build a diversified portfolio where there are many different opportunities that have the possibility of hedging against inflation, because different types of inflation have to be hedged in different ways. So if it's a very quick increase of inflation as opposed to a slow rise of inflation, is it temporary? Is it a long and a persistent type of inflation? So for us, I never model myself an economist that can predict where inflation is going. And so what I need to do is build a diversified portfolio where there are different options that can fight the different types of inflation, and to pay close attention to it. And you know, fundamentally, it's done through the equity markets.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I think that the business is evolving to have much more customization on clients' portfolios, and that's a good thing, but it's a challenge to kind of move into that mode.
Big Tech reports earnings.
Another big day. Apple, Amazon crushing it.
Bloomberg brings you the headlines first.
Revenue growth falling for the first time.
Missed on every top and bottom line metric apart from one.
This really is a story of strength.
Plus, expert analysis to keep you informed.
We've been waiting for this.
The fact that they are not profitable is concerning.
Is this a company that indicates maybe a recession is coming?
We think it's going to be a major bounce back coming in next year.
Nobody covers tech earnings like Bloomberg, your global business authority. Prepares for the latest read on inflation.
We're all pumped for a happy CPI day.
Will headline inflation ease as expected?
If you get something that comes in much lighter, this rally that we're seeing, we think it will continue.
Instant reaction on Bloomberg Surveillance.
That headline CPI figure.
That's going to be a scary number.
That is an upside surprise.
And what it means for the Fed.
The Fed is not about to pivot.
Powell is willing to push this as far as needed.
Inflation in Focus, Wednesday on Bloomberg.
The conventional wisdom that the Democrats will lose the House is probably right if you look at history, right? Democrats face an uphill battle, but the margins there do count. You know, I think our view is that they could lose maybe as little, as few as 10 seats or as many as 50 seats.
Libby Cantrell, really quite good yesterday with PIMCO. It was too short a conversation ahead of their public policy study. And of course, all of it in Washington. Affirm it now to the election. The first Tuesday of this November. We actually had our first meeting yesterday on our coverage of that. Really looking forward to Bloomberg Surveillance giving you the messaging of that election the morning after. It is the morning after a raid by the Federal Bureau of Investigation under search warrant. So not a raid, but a search of a former president's private residence. It is unprecedented. Greg Valliere, on short notice, joins us this morning. We're honored that the gentleman from AGF could join us. Greg, you and I remember in our youth Watergate. This isn't Watergate, isn't it?
No, it's not. There are a lot of differences. And one is that, of course, Nixon resisted all of this. And I would argue, Tom, that last night was a trifecta for Trump, 3 victories in one evening. Number one, he's on the front page of every newspaper in America. He loves that. Number 2, he gets to play martyr. He's brilliant at playing martyr. And number 3, the Republicans are looking pretty unified. And if you look at the quotes from everyone from Kevin McCarthy to obscure House members, they're all outraged that this happened. So for Trump, I think it's a victory.
If Democrats, independents, and Republicans assume that the Attorney General will in some point voice or act or begin a judicial process, does that get in the way of our electoral process this November or a November 30 months from now?
It may, to the extent that it might affect voting, but I don't think legally it will, because Donald Trump specializes in cases that drag on for 7, 8 years. So he'll appeal and appeal and appeal, and I think he still could run. The key, as always, is moderate voters. Will moderates decide they've had enough, like many Republican moderates have decided? That could make a difference, but right now, I think that this is it's a plus for Trump.
How much, Greg, does this change the dynamic heading into the midterm elections? Because we did see some of the polls showing that Democrats have been gaining ground on the heels of lower gas prices and some of these legislative wins.
Yeah, that's really intriguing. I mean, you've got food and gas prices coming down. You've got Biden having a pretty darn good summer. So it's possible that maybe the Democrats' losses will only be 5 or 10 seats in the House. Maybe the Democrats will keep the Senate. But I can't see the House staying Democratic. I think the House will flip.
But Greg, what does it say in terms of President Biden's second 2 years of his first term, this idea that he will not be able to get that much more legislation through? How do you sort of advise some of your clients in terms of what they can expect in response to a downturn, what they can expect in terms of debt reduction, and some of these other issues that have been increasing talking points?
It's going to be a pretty meek agenda in the last 2 years. There's not much left that they can get done. So for my clients in the financial world, that's a good story. Gridlock is a good story. They don't have much to worry about. I don't see any new taxes coming for a long, long time. I don't see any big new spending coming for a long time. The big crisis, I would argue, is geopolitical. There's a lot to worry about there.
Yeah. Well, on that point, Greg, this is a United States of America, where we're talking about the home of a former president being searched for documentation he may or may not have taken from the White House, at the same time that we're expecting in a couple weeks hearings to resume on insurrection at the U.S. Capitol. That, to me, looks like a democracy very much in some form of crisis. How does that play when we're trying to defend democracy in Taiwan?
Yeah, it's a very, very good point. And I think Trump, of course, breaks all of the rules. That's always been the case with him. And I think it will happen again. I would just say that Trump is still alive politically, and I would have guessed a few months ago that he'd be close to finished. He's not finished. You can't underestimate this guy.
And what about the other Republican potential candidates for 2024? Is there realistically anyone who could beat him if he runs again at this point?
Maybe DeSantis. You can't rule him out. I think after Liz Cheney loses next Tuesday, she'll probably go to New Hampshire and see how things look for her as a candidate. There could be a dozen candidates, but if Trump runs, he'll clear the field.
Greg Valliere, I'm going to leave it there. Thank you on short notice for joining us here on this most historic day for a shocked America. Again, a search warrant and a search by the Federal Bureau of Investigation of a former president's residence. This is in Mar-a-Lago, Florida. We'll have much more on this. I know David Weston is putting together a balance of power that will really address this. I believe we see that on TV and radio at 12 noon. Lisa, I want to get back to inflation tomorrow. We can partition it any way we want, but I want to go, we're making a comedy of it, and I have immense respect for the Cleveland Fed and the way they calculate core CPI around 16 parameters, but we're all nowcasting. That's how we've gotten our economics down to we're nowcasting inflation.
What happens, do you think, in markets if that CPI print comes in well above expectations? What if it rises from 9.1%? Where is the balance of risk right now in markets?
It's an important question, and what's important here is, let's say it goes out to 9.4%, whatever. I don't think the markets look at that. I think they go beneath the headline data, and then they'll make their assumption from there, Lisa.
I don't know. I think if it really ticks up or it stays at 9.1%, I think that would be shocker, because we've been talking peak inflation, and there has been a profound questioning of the Fed's framework when it comes to understanding inflation, how much it will roll over. That might change the narrative completely.
Kaylee?
Well, is peak inflation the new inflation is transitory? I mean, realistically, is that where we're at right now? Because if that is the case, what Lisa is describing, that to me is what that looks like.
Yeah,
I think we're going to go to the core analysis, and that may go up as well. I don't mean to push against that idea, but I'd like to think the markets will not look at the headline data. And I would say also critically, Lisa, the headline data in the United Kingdom and continental Europe is more of an important analysis because of the immense utility pain there. I don't detect that utility pain in America.
I would agree with that. That has been the huge driver of some of these shocking numbers that we've seen out of the likes of Germany, which has been anti-inflation for so many years. I do think that the other interesting factor of the CPI report is what happens if it comes in at consensus, 8.7%? How much does it have to go down for it to surprise the market the other way and pave the way for that Fed pivot so many people were confident in a couple weeks ago?
I'm not going to mince words. You're going to want to stay with us. An important conversation with Neil Dutta, head of U.S. Economic Research, Renaissance Macro Research here. With futures, they're in a churn now, set a little lower off the Russian pipeline news. Futures at -10. Stay with us. This is Bloomberg.
As you look at the company you've created, how do you think you're having an impact on the world for the betterment of the world?
We are by far and away the best positioned entity to solve the question as to what does the human genome mean and how can you apply it to individuals.
We were thinking big from the beginning. I mean, the reason that I was interested in doing this in the first place was a much bigger challenge than making a comfortable shoe or doing something in the fashion industry as a narrow opportunity. We thought that there was a big leadership opportunity. We looked around at an industry where there was 20 billion pairs of sneakers made every single year, and it was 100% made from plastic and the hides from cows, and it was terrible for the environment. And we thought that we could offer something to consumers that was differentiated in the way it feels, more comfortable, higher performance, and do that because we use sustainable materials. And in doing so, we could take a really interesting leadership opportunity and grab that and use that to tell a totally different story and compete on a totally different vector than what the rest of the industry were doing.
The markets count down in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis, weekdays. Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. MasterCard is building on its core business, branching out into new products and services. It's up to CFO Sachin Mehrad to ensure this growth strategy pays off.
The key to being successful in this kind of environment is to have a diversified portfolio.
Chief Future Officer, Wednesday on Bloomberg. Brought to you by Workday.
Surveillance, we welcome all of you. John Farrow's off. Kaylee Lyons in for John. Lisa Bramwitz and Tom Keene. We're thrilled you're with us today. Staggering towards an 8:30 number tomorrow. Productivity coming up, and we'll look at that data as well. Futures at -12, Dow futures -22. We'll see what we see with a curve inversion of 46 basis points, Lisa. That's really quite something.
Yeah.
We've got numbers. Here's Michael McKee.
Guys, unfortunately, they are not good numbers for the economy. It isn't going to change the way the Fed thinks about things, but non-farm productivity fell 4.6% in the second quarter. Of course, what you're taking is an index of output divided by hours worked, and you end up with the 4.6% decline. The number in the first quarter, the final number in the first quarter, down 7.4%. That was the biggest decline since 1947. This is the biggest 1 year over 1 year decline since the series began, they say, 1948. Unit labor costs up 10.8%. That's not going to surprise a lot of people who are doing hiring. And in the final months of the first 3 months, rather, of 2022, they were up 12.7%. So a little bit of a decline, but it's still faster than was anticipated. That non-farm productivity number does match what was anticipated. Small business optimism was out earlier this morning. Just wanted to throw that into the conversation because after many, many months of declining, it actually went up a little bit, 89.9 from 89.5. We just recently did a story that highlighted those who think that the U.S. economy is going into recession. Bill Dunkelberg, who runs the survey for the NFIB, was one of the few people who thinks that things are terrible, but his group with a little more optimism out there this month.
Very quickly, Michael, to pivot to tomorrow, what is the tone right now? A lesser inflation or a greater inflation than survey?
I think there seems to be a bit of a lean towards a greater inflation, but I'm not sure if that's not a monster under the bed fear. The Cleveland Fed, you were talking about that. Their nowcast has people a little bit scared. But we have seen gasoline and oil prices go down, energy prices go down. The question is whether food and some of the other prices that have worked their way into the CPI.
Michael McKee, thank you so much. An incredibly important day tomorrow for Chairman Powell and for all of us as we look at a report on this inflation affecting all. Right now, in hugely anticipated, Neil Dutta joins us. He's head of U.S. economic research at Renaissance Macro Research. But what's important there is he writes with a stiletto knife in his hand, slicing and dicing the zeitgeist that is out there. Neil Dutta joins us on our American economy. I love the way you go after consensus. What's consensus get most wrong right now?
Well, I think the consensus right now is pivoting feels like very quickly to peak inflation, slower inflation, maybe the Fed backing off. I think that's probably a mistake.
You think that that's a mistake, Neil, because you think that the Fed is going to keep going and that inflation hasn't yet peaked?
Well, I don't think core inflation has peaked, Lisa. There she is, Tom, my arch nemesis, now my best friend. We're on the same side of we're on the same side of the fence. Yeah, look, I mean, at the end of the day, I think things changed at the June FOMC meeting. The Fed basically told us that it was willing to, push the economy into recession to achieve its goals. And, we went from it's going to be challenging to achieve a soft landing to now it's going to be very challenging to achieve a soft landing. I mean, the path is narrowing. I mean, they sort of use these kinds of, words to basically demonstrate how difficult the task is going to be. But, look, I mean, the last employment report was a knockout. And, essentially, we have inflation significantly above target. You heard Mike McKee there talking about unit labor costs. I mean, unit labor costs are up a lot. Interestingly enough, during the pandemic, prices have actually been trailing unit labor costs, which in my view means that there's more upside to prices going forward. And despite the fact that price inflation is so elevated, financial conditions, what have they been doing over the last couple of weeks? Well, they've been easing. So to me, that suggests that the Fed has a lot more room to go. I think the die is cast now for a 75 basis point move at the September FOMC meeting, and they need to leave it on the table for the remaining 2 meetings this year.
What does that mean for equities? I know that you've been a big bull in terms of the corporate resilience and their ability to adapt and adjust, to use Tom's phrase. Why is this time different, this moment different when it comes to that?
Well, I mean, equity markets, when you think about it fundamentally, it's really driven by 3 factors, right, Lisa? It's interest rates, actual and expected earnings, and the risk premium, right? So the move in July, the 9% burst in the S&P 500 last month, that was entirely driven by lower interest rates. So if I think the Fed's going to keep hiking, I think interest rates will go up. And, the economy is not out of the woods. I mean, we're going to see residential investment contract in the 3rd quarter. We're going to see capital spending come down because growth expectations have softened. Inventories will likely be more negative, I mean, particularly for, sort of durable goods industries. So you'll see an inventory liquidation of some kind, I'm assuming. That's all negative for GDP growth, which is negative for growth and earnings. And so, if interest rates are going up and earnings estimates are coming down, it's hard to be optimistic about the equity market. And of course, the equity market is one way the Fed has to slow the economy down.
Yeah, on the subject of earnings, Neil, obviously the ability to retain profit margin in an inflationary environment like this one is predicated on the ability to pass on higher input costs to the consumer and consumers to tolerate those higher prices. Are we overestimating the resilience of the U.S. consumer?
Consumers have an enormous ability to take on higher prices, as evidenced by the fact that, look at how much excess savings they have. The entire improvement in consumer spending in the first half of the year was driven by lower savings rates.
But that can't last forever, right?
Bingo.
So where does that leave us, Neil?
To me, it just leaves me more cautious on the economic outlook. I'd be cautious on stocks. I get that the equity markets have kind of ripped here. Maybe a lot of the people that were thinking the way I do about things already sold back in June, but this isn't over yet, that's my view. But I think one of those reasons is because the Fed's not done yet. And you think about the rest of the world, the dollar is likely to. I don't think the dollar strength is over yet. You have a U.S. economy holding up better than many of its major trading partners. You have the Fed still hiking. That's obviously very dollar bullish.
So the holding up better. If we get a Dutta inflation, if we get whatever the real economy will give us, and it doesn't sound like with productivity it's going to be all that much, that's still a sustained nominal GDP. So let's go to the Dutta optimism. Can we say that Dutta and Bramo agree to agree? I think we could say that, folks. This is a rare occurrence.
Breaking news.
But away from that, when you say to Bramo here in months, you're wrong, it's going to be because Dutta's optimistic. Can corporations adapt to this unique set of cards right now?
Well, they're going to adapt, but Tom, that's going to require some pain for the economy, right? I mean, if you think about the first half of the year, you know, to me, for business economics, the most interesting thing is this reconciliation between the fact that hours worked have been rising very robustly and output has not. So we've seen this big drop in productivity. So the question is, how do companies reestablish stronger productivity? That's going to require some combination of slower hiring, fewer hours worked, raising prices.
For 50 years, it's been total factor productivity to the rescue. Is it going to come to the rescue again? Technology is an overlay?
I mean, it takes time. I mean, I don't see an investment boom out there right now. Okay. So where's the productivity going to come from?
I just want to get onto us on a negative note. So Bramo and Dutta agree to.
Look, I mean, honestly,
well, Lisa.
You know, this is the issue is that a lot of people are looking at the financial conditions index, and Neil, you mentioned this, and it's actually the least. That it's the least tight, it's the weakest that it's been, it's the loosest that it's been going back to April. And it makes no sense. And this is the bear case. No, but Neil, you alluded to this, and this is where I think we agree, is the Fed's going to look at this and say, I don't think so. And they're going to push back. When do we get that pushback?
Well, it could come as soon as Jackson Hole. It could come at the September FOMC. You've started to see it particularly among a lot of the regional Fed presidents, right? I mean, they've been saying we're not done yet. You know, look, I mean, the other thing, of course, is that they'll try to be hawkish, but they sound dovish in the process. For example, you know, they'll say something like, well, it's the market's it's too soon to be pricing in cuts. Well, you shouldn't be pricing them in at all. So why are you even giving the market that sort of language? You know, I think what the Fed basically needs to say is that we have a singular focus on bringing inflation down. And we're willing to do what it takes in order to do that. And, you know, there are no cuts coming.
I'm depressed. Neil, thank you so much. Neil Dutt of Renaissance Macro. What I'm depressed about, folks, is there's a point, like out there somewhere, where you sort of like forget about birthdays, like you don't celebrate them. And I mean, Lisa, you're not there. I mean, you know, everything's a three-ring circus when Lisa has a birthday, but
where are we going
Lisa,
with this, Tom?
Lisa, if it's someone's birthday and they're not of a fossil vintage, they actually celebrate their birthday.
Is this your way of saying happy birthday to Kaylee Lyons?
We're saying happy birthday.
Yes, I think we're getting there.
We're saying happy birthday today to someone who actually celebrates their birthday in a normal, rational way.
Thank you,
Happy
Tom.
birthday,
There is
Kaylee
nowhere
Lyons.
else I'd rather be on my birthday than here with you and Lisa.
I just chopped up a fur ball. That's all I can say. Tom, it's a quite exceptional moment to be celebrating.
There's a birthday.
A birthday. Well, here we are. And I will say, as I head off to the other property that John Farrow has, we'll be celebrating the birthday, talking about semiconductors and chips. I'm really excited for this. Sanjay Mehrotra, he's the president and chief executive officer of Micron Technology, speaking to us from Washington, D.C., where he is there after announcing a $40 billion investment over the next decade to really try to ramp up production in the U.S.
And what's great about that, Lisa, is coming up, I can call Kaylee Lisa or Lisa Kaylee. This is Bloomberg.
She's really
Good
excited.
morning.
I can testify right now.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Donald Trump is portraying himself as a political victim today, saying he's being mistreated by Democrats who don't want him to run for president. That's after federal investigators searched his home at Mar-a-Lago in Florida. It's part of an investigation into whether he took classified documents from the White House when he left office. The former president was in New York during the search. ETF manager Kathy Wood says the U.S. is already in a recession and the Fed will have to start loosening sometime next year. Wood spoke to Bloomberg TV.
We believe we're in a recession. 2 consecutive quarters of real GDP declines is the beginning of that definition. 3 consecutive months of declines in leading indicators which we have now, would suggest the same.
Wood says her funds will stay fully invested during the downturn in what she calls innovation. A new working paper from the St. Louis Fed says that ending emergency jobless benefits had a significant impact on boosting employment. That may underscore Republican criticism of a Democratic program. The federal government provided enhanced benefits during the pandemic. It increased eligibility to many of the unemployed who would not otherwise be covered. And Boeing is set to resume deliveries of the 787 Dreamliner as soon as Wednesday. That's almost 2 years after they were disrupted by manufacturing flaws. The FAA says that Boeing has made the necessary changes to ensure the plane meets certification standards. Global News, 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays, This is Bloomberg.
I'm definitely not in the soft landing camp. I think we pushed too far. I think we're seeing the consumer roll over. I think you're seeing inventories build. So when people realize that we're going to have to pivot, the first reaction, yes, maybe we rally, and I think that's the stage we've been in. But then the reality is going to hit like, whoa, we have to be very careful. What are future earnings going to look like?
On fire yesterday, Peter Cheer, head of macro strategy at Academy Securities, and this is what we see, folks. The news flow driving up to the inflation report tomorrow has been extraordinary. There's not only the opinions this way, that way, the other way, but also all the measurements and all the gauges of it. Well, Kaylee Lyons with us here. John Farrow is off right now. Lisa Bram was preparing for an eventful 9 o'clock hour. You really wonder what we're going to see from Washington, and the 9 o'clock hour and driving towards balance of power at 12 noon with all that we've seen in the last 24 hours of presidential and judicial politics. Right now, we touch on a really important study, this done by the founder of Bloomberg News, Matthew Winkler, our former editor-in-chief. And Barry Ritholtz following up on it and saying, Mr. Winkler, you're dead on. Mr. Ritholtz, of course, is a master's in business host and runs a few numbers of doubloons at Ritholtz Wealth Management this morning. Barry, you and Mr. Winkler really go after the certitude of sentiment indicators. I genetically dislike them. I don't trust them. Give us a primer on why sentiment indicators are something we must be wary of.
Well, historically, humans as a species are very bad at not only predicting their own future behavior, but at understanding exactly what they're feeling and why. And you know, probably the best example of this is the Black Friday surveys we get every Thanksgiving telling us what people are going to be spending on holiday shopping. And they're always off by a magnitude. When things are going pretty well, they wildly overestimate it. And when things are going poorly, they wildly underestimate it. People don't know what they're going to be doing, thinking, feeling 3 months from now, and it turns out they really don't know how they feel today. The questions that are asked, how they're phrased, the actual language used has a substantial impact, often skewing the results. It's very hard to do this well. Very few people do.
And talk about how partisanship plays a role in this as well, because if you are a Republican not in favor of a Democratic presidency, does that make you think that the economy realistically is worse inherently?
Well, that was Matt Winkler's point. We've talked about on this show repeatedly why you should never let your politics influence your investing. Politics is emotional. Investing needs to be somewhat rational and probabilistic, and never the two shall meet. But it turns out that lots of folks change their view of the economy depending on whether or not their guy is in the White House. Once their candidate loses, they immediately drop. By the way, this isn't specific to Democrats or Republicans. Both parties seem to do it, but as Matt Winkler showed in his piece yesterday, it's a little more intense on the right than it is on the left, but you could probably say that about a lot of things.
Okay, so Barry, obviously sentiment is pretty dire. When you take a look at the data we have gotten out, like the payrolls report on Friday, do you see an economy in dire straits? Do you see economy in recession?
No, well, so we see an economy that's going through a growth recession, meaning the rate of growth is slowing down. But you don't have consumer spending at these levels. You don't have hiring at these levels. You don't have wage gains at these levels in a recession. That's not to say a recession isn't out there somewhere, whether it's next year or next quarter. We really don't know. But generally speaking, this is a pretty robust recovery and economy. And when we look at the two negative prints of GDP, you know, they're very technical reasons for that. Some of it is trade, some of it is inventory buildup. A lot of it is in real terms, meaning that inflation adjusted, it looks like we're contracting, but in nominal terms, we're expanding dramatically. Look, in the piece I wrote up this morning, riffing on what Winkler wrote, Michigan Sentiment Index going back to 1978. And you have to ask the question, is this economy worse than the 1980-82 double-dip recession, the 9/11 terrorist attacks, the dot-com implosion, the great financial crisis? This is like... This is silly compared to those years.
Barry, and we got to move on to another topic here. We got history being made right now. But Barry, to your wonderful point, is it the same economy as those other important dates? Barry, 210 spread is just broken down. We are almost buttressed up where we were in 1982 and in 2000. We are seeing an inversion and frankly a pretty normal plunging to a greater yield of the twos versus the tens. What does curve inversion signal to investors? Is it something they should worry about or just monitor?
So both. You have to pay attention to it. What you want to look at when the curve inverts, because not every inversion automatically means recession, is you want to look at the two Ds, depth and duration. Is the curve inverting deeply, and is it staying inverted for a long period of time? The one counter to that is, hey, when you're starting from zero and the Fed is raising rates rapidly, you can't help but invert the curve. It's just the nature of going from 0 to 2 1/4 in 6 months. The Fed is the driver of the curve inversion. That said, this is one of those things that has a 97% track record. There have been a couple of short, shallow inversions that did not lead to a recession. But when the 210 yield curve inverts, you should, even with all what the Fed's doing, all the hair on this, you should pay attention to it. It means that the odds of a recession over the next 12 months is increasing.
Okay. We got to leave it there. Barry, thank you so much. Greatly appreciated, particularly there on investor sentiment. I'm so glad, Kaylee, we did that with Mr. Ritholtz, because I'm just genetically not a giant fan of these indices. Sometimes confidence indexes will get my attention, but as a general rule, I'm just like, there's just so much noise.
Okay.
I mean, no one's ever called me and said, what's my sentiment right now?
That's fair, but when Jerome Powell directly references consumer sentiment,
who gets
Michigan
called?
Sentiment, I don't get called. No one calls me. People text me, Tom.
They text
for
surveys.
No, I don't get called for surveys or texted for
I don't
surveys.
either.
But
I mean, I just don't get it.
But okay, so maybe you won't be paying as much attention to the UMich consumer sentiment data that we get on Friday, but we will all be paying attention to the CPI data tomorrow. At this time tomorrow, we'll be 25 minutes post CPI. What conversation we'll be having is going to be really interesting, depending on if the print is hot or cold and what the resulting reaction is in a bond market that has been absolutely confounding for the better part of 2 months now, Tom.
There it is, 47 basis points. We just dipped down. I'm going to say this again. The call of the summer was Priya Misra at TD Securities, and that velocity to negative 40 basis points, and she even alluded at one point to negative 50. I can't believe I'm saying that. We're almost there. There will be an extraordinary Bloomberg surveillance tomorrow wrapped around an extraordinary inflation that affects all of this nation. These are unusual times, and I hate to tease forward to it. Will we see double-digit inflation? This is Bloomberg.
The boardroom. Let's suppose you win a proxy fight and or you just get invited onto the board. You go to your first board meeting, and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we presented with the plan.
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short term.
Bloomberg Markets, The Close. Weekdays on Bloomberg. No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
There was something of a grey zone battle between Taiwan and China.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
City for our viewers worldwide. I'm Lisa Abramowitz in for Jonathan Farrow. Right now, we are seeing red deepen. NASDAQ futures down 0.6%. We will get you into the countdown. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open with Jonathan Farrow.
Begin with the big issue, the peak debate taking hold.
Look at inflation expectations.
The inflation expectation.
Consumer inflation expectations are dropping.
Inflation expectations and break-even inflation rates starting to come down from their highs.
Probably 100 basis points is not necessary.
We are at an important inflection point in the inflation story.
If we've reached peak inflation, what does that really tell us?
We're going to see inflation decline, but to what level?
Does it mean it's really going to fall down to that 2% target that the Fed is looking for?
Because the forecast in the Fed to say that they're at neutral.
The labor market right now is very strong. Inflation is very high.
It makes the notion that we're at neutral comical.
That's a 2% inflation rate.
I find that hard to achieve.
We're still experiencing this inflation surge.
Joining us now, Invesco's Kevin Holt and Piper Sandler's Michael Kantrowitz. The key question is peak inflation. The new inflation is transitory. Is this a mirage? Kevin, I'd love to start with you. What is the market's reaction if we do get an upside surprise tomorrow to that CPI print?
Yeah, I think the market's been pretty optimistic in terms of CPI rolling over here, particularly with energy prices and what happened over the last 30 days. So I think if we get an upside surprise, I think you're likely to see a decent sell-off as it becomes, I think, more apparent to investors that the Fed's going to be here for a little bit longer and raise rates a little bit higher than what maybe the market's been anticipating maybe the last probably 4 weeks.
Michael, do you think that that's the balance of risks right now, especially after all of the expectation for a Fed pivot?
Yeah, the market is up quite a bit in the last 2 months, I think entirely off of the view that inflation's peaking, given that interest rates have declined, oil is down, and Fed expectations have come in a little bit. So, yeah, I think the risk is that the markets get disappointed given how much it's run up in the last two months.
Michael, where do you expect the biggest sell-off if there is an upside surprise?
It's going to be in those interest rate sensitive stocks, probably those growthy stocks that don't have any earnings that have, were down 70, 80% earlier this year, now have bounced 20, 30, 40% or more. Those are the names I think that are most at risk, the poorest fundamentals.
Kevin, what about the balance of risks on the other side? If you do get a bigger disinflationary print than we've been expecting, what's the likely read-through? Do you think it will have any effect, or do you think that people are fully positioned for that reality?
I mean, I personally think people are fully positioned, and it's over the last week, you've seen a number of publications come out just, pointing out some of the inconsistencies in the energy data that we've seen over the last 4 weeks, where it says the energy consumption in the U.S. is down versus 2020 when we were all locked down over the rolling 4-week average. So I think the market's kind of seeing through this. I think we're going to get some revisions in the next 2 or 3 weeks on energy of upward demand. So I think the market's a little bit ahead of this. So I think it'll be frankly a sell in the news, or just kind of moderate reaction because it's already anticipated.
That's the very near term. Michael, I gotta be honest, you had a pretty bold statement in your latest projection. You said it's time to prepare your portfolio for the next bear market, one led by earnings and employment. It's coming, and it's going to be ugly. Can you dovetail this idea of a faster than expected rate of inflation, the jobs report that we got on Friday, and this really bearish outlook over the next few months?
Yeah, well, the outlook's really over the next few quarters. We've had a huge shock in inflation and interest rates, really across the board, and things we haven't seen in decades. And so while the market's been very focused on that, I think investors are going to be increasingly focused on the economic implications of rising interest rates and rising commodity prices that always have a very long lagged effect on the economy. So the first 6 months of this year, we had a bear market due to higher rates pushing down multiples. Over the next 12 to 15 months, we're going to see the implications of those higher rates on earnings, profitability, employment, and that's the typical bear market that we're used to, where earnings expectations are coming down and unemployment claims are rising. And I think that's going to be the big story, not inflation, over the next 12 months.
This has been one of the distinguishing features between the bulls and the bears. The bears seeing the Fed having to take more action in the face of some of this strong data. Citigroup's Andrew Hollenhorst expecting inflation to continue driving Fed hikes. He writes the following: our base case remains for a 75 basis point hike in September, but we would not be too surprised by a 100 basis point hike if core inflation comes in stronger than expected. Kevin, do you agree? Is this basically the likelihood that you're also tracking in your portfolio?
Yeah, I mean, I think it is. I mean, wage inflation, we've already seen the job data last week. Job data continues to be very strong. Wage inflation is not going away. Rents continue to be very strong. Food inflation, particularly with this, the ongoing conflict with Russia and Ukraine, continue to be at very high levels. And as I said, oil prices, even though they're down a bit, and I think personally they're going to bounce a little bit higher, but I don't think it's going to get a lot better. So if inflation goes from 9% to 8.5%, is that really a victory? I would say no, and I think the Fed's going to have to react.
A lot of bearishness ahead of that inflation read that we get tomorrow, the CPI coming out, the latest read on inflation. In America, we are tracking all of the data points. Economists expecting a headline CPI to cool modestly with forecasts at 8.7%. How much does this really dictate the path forward for the Federal Reserve? Bloomberg's Michael McKee has been tracking all this. Mike, what are you looking for tomorrow?
Well, it's kind of interesting because over the last couple of days, Lisa, we've seen some people on Wall Street start to worry about a higher expected print for CPI than forecast by the Bloomberg economists. And the reason being this Cleveland Fed inflation nowcast, you can see the white line there, ran below the actual CPI print for some weeks in a row, and then it is now above it. But it's at 8.8%. The forecast is 8.7%. Does that really matter, a tenth of a percentage point? In this environment, it seems to. The Fed, as you saw from that Jay Powell quote, is looking for compelling evidence, that's the word they use, that inflation is falling. And today, you're going to have to look for, or tomorrow rather, you're going to have to look for the month over month to see if there's evidence it's falling, because the year over years are distorted by base effects. CPI month over month expected to tick down to 0.2 from 1.3%, and the core 0.5 from 0.7%. Now, that would bring down CPI year over year to 8.7%, the forecast of the consensus forecast, and the core would go up because of base effects to 6.1%. So let's see what happens tomorrow. Whether it affects the Fed or not, and this whole 1%, 75 basis point move thing is going to depend more on inflation expectations probably than actual inflation, if inflation comes in as forecast. And you can see what happened yesterday. The white and the blue lines there are those New York Fed anticipated inflation levels for 1 and 3 years ahead. The other two are the University of Michigan's. We get those on Friday. But basically, over the last month, we've seen a drop, primarily probably because of the gasoline price fall. But if people are still hanging in there on inflation and not pushing expectations higher, that gives the Fed some comfort that they haven't lost control of inflation yet.
Mike, thank you so much for that. A lot of muddying signals as we look through the different nowcasts and then that New York Fed survey of inflation expectations. Michael, you've been talking about that bearish view about what you expect in the quarters to come. What does that mean when it comes to oil, given how much it's come off the highs that we've seen in the past few months?
So yeah, the good news is that oil's come down, and we'll probably see that reflected in a better Michigan's sentiment that's much more sensitive to gas prices and oil prices, where confidence, the other consumer confidence survey is more tied to the job market. So it's good news that it's obviously good news that gas prices are coming down. The bad news is that food and energy inflation, the last print was 22%, the highest since 1974, the second highest on record. And anytime in the past when the Fed's been raising rates and food and energy inflation has been above 5%, that's been the historical track record right before a recession. So in my mind, those two, that combination puts extremely high odds in a recession. And ultimately, I think we're going to see the impact of that as claims start to rise over the next or they have been rising, but continue to rise over the next several months. And I think investors will be focused on claims as much as they're focused on inflation today.
Just to put a bow on this, Michael, are you shedding oil and exposure, energy stocks? Are you basically leaning into this saying it's more signal than noise?
Yeah, I think the easy money has been made within the energy sector. At this point, the risks reward are much more balanced. And historically, when investors really start to latch onto the deterioration of the job market, specifically with unemployment claims, oil tends to go down and really struggle to go up. So, obviously the supply issues there are keeping many people bullish. And so we've moved it down to a market weight. We think given the drawdown we've already seen and the timing of when we expect claims to really spook investors, really more in the fourth quarter, we think there's a couple months here where energy stocks can still market perform.
Kevin, do you agree?
Yeah, I mean, so we kind of look at what's discounted into the stocks at this point. So honestly, 8-10 weeks ago, we were unloading stocks pretty aggressively within the energy space because they were discounting $75 oil. We would argue today with the pullback, dramatic pullback in a very short period of time, they're discounting 58 to 60 again. So with our mid-cycle pricing assuming 75, we've actually started to incrementally add back here in the last week or so after this dramatic pullback, because we do think supply is different. We think the incentive systems for management teams are different. So although you do have some demand headwinds, listening last week to some of the downstream companies, Marathon Petroleum, Valero, they have not seen the demand downtick that we've seen in the data. So again, we're trying to follow the data from a bottom-up basis.
So Kevin, just to sort of put a bow on that, do you think that this is more noise than signal with respect to how much oil prices have come down?
I think it's always hard to discount that. But yeah, I think there was such a big premium because of Russia, Ukraine, that Russia oil is finding a home in India and China. So I think that's some of it. But I do think probably 2/3 of it is noise just around demand. I mean, I'm more concerned about emerging markets demand with the strength of the dollar than I am continued strong demand in the U.S. at this point.
We will dig into that coming up. Kevin Holt and Michael Kantrowitz, both of you are sticking with us. Right now, we want to take a look at some of the stocks moving ahead of the opening bell. Abigail Doolittle here. Abby.
Hey, Lisa. Well, you know, it's interesting because we have the futures down modestly, but we have a few movers that are down sharply. You think that they would weigh more, at least on sentiment. I'm talking about Micron, the chip maker. It's down more than 4%. This after they pre-announced to the downside. That was the case with NVIDIA yesterday. Different types of chip companies. Micron focuses on NAND and DRAM forms of storage. But the common denominator is Micron is talking about the weakness being a demand issue, not supply. And speaking of demand, and we see that NVIDIA down sharply for a second day. Speaking of demand, though, Norwegian Cruise Lines, they put up a worse quarter than expected, a wider loss. But even more worrying is the fact that they cut guidance. And it seems that it has to do with consumer discretionary spending, not having the money. That stock down 8%. And then finally, the biggest laggard on the day, Novavax. The stock is plunging clearly. They put up a huge miss in the last quarter. They also lowered the outlook. Both Jefferies and Cowen have cut their price targets on the share. Cowen saying that they are frustrated with management once again. That stock does have a 19% bearish short interest. Those shorts vindicated today, Lisa, clearly.
Abigail, thank you so much. We will be speaking with the Micron CEO coming up in just about 15 minutes' time. Also coming up, President Biden taking a victory lap.
There's a whole range of things that are really game changers for ordinary folks. Now, some of it's not going to kick in for a little bit, but it's all good.
That conversation is still ahead. We are seeing declines across the board here in the equity space as we chart toward that CPI print tomorrow. This is Bloomberg.
Is there still room for Abenomics to be carried out in full in the way that Shinzo Abe imagined it?
The economic situation that Prime Minister Kishida faces today is very different from the one that Abe Shinzo was faced with when he became Prime Minister 10 years ago.
Does Japan need a new policy? Is that what Kishida has to learn, or are there parts of this that he should hold on to?
I think there are probably parts that he should hold on to. I think the main challenge which Japan faces is demography. The population is declining, rapidly aging. Women are totally underused in the labor force, especially educated women. One needs to think about increasing immigration. These are issues that Abe tried to address, but a lot more needs to be done to quote-unquote revitalize Japan.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg. Street prepares for the latest read on inflation.
We're all pumped for a happy CPI day.
Will headline inflation ease as expected?
If you get something that comes in much lighter, this rally that we're seeing, we think it will continue.
Instant reaction on Bloomberg Surveillance.
That headline CPI figure.
That's going to be a scary number.
That is an upside surprise.
And what it means for the Fed.
The Fed is not about to pivot.
Powell is willing to push this as far as needed.
Inflation in Focus, Wednesday on Bloomberg.
I think that he's in a fragile place. He has problems with his economy. He's acting like a scared bully, and this is before the meeting where he will want to be reelected.
That was House Speaker Nancy Pelosi reacting to China's response after her Taiwan trip, also saying that she had majority support to go to Taiwan. This comes as President Biden prepares to sign the CHIPS Act into law aimed at countering China in semiconductor manufacturing capacity. Bloomberg's Joe Matthew joining us now from Washington, D.C., and we are about 15 minutes, a little bit less, away from speaking with Micron's CEO on the Hill as he goes to that. How significant is this chip bill? How quickly can it bring production online in the United States?
Well, that's a great question because this is a long-range plan. To be clear here, Lisa, we're talking about many months, in fact, years it takes to get foundries up and running, but it's already prompted companies like Intel and Samsung to make major investments, Intel in Ohio, Samsung in Texas, and that was the refrain from the White House. If they didn't get this done, financial incentives from other countries might undo this whole idea of boosting domestic manufacturing of chips. To your point, though, this is it. The president signs it today. It passed last month after taking months to get done here with some Republican support. And today, you'll see the president sign this with quite a collection of CEOs, not only chip makers, but also interesting to note the CEO of Lockheed Martin will be there, which reminds us of that 11th hour pitch that Gina Raimondo made, the Commerce Secretary, that this is not just about your home computer or your washing machine. This is a national security problem. It's a major issue and would hold us back potentially if we lost access to chips from Taiwan, for instance, from making more military hardware.
Yeah, there are chips basically in your flower plants at this point. At some point, though, there is a discussion in Washington, D.C. that is much more driven by the sensational. How much are people talking about chips in D.C.? How much are people talking about the search of Mar-a-Lago of Donald Trump?
Well, it's a difficult bit of timing here. As I mentioned, the bill passed last month. They wanted to hold on at the White House and do it on a day like today, so the president could be out there in the sun talking about this and making good with CEOs. But indeed, the search of Mar-a-Lago last night has changed the narrative everywhere in the world of politics. It's going to be difficult for the White House to get through to the lead story today, as we have an unprecedented situation here, and there's very little that we know about it. So many questions to answer. As Donald Trump let us know yesterday, the FBI, in fact, did serve a search warrant that's never happened before for a president or a former president, and we still don't know exactly what they were looking for after a months-long effort to get back documents and some other items from the White House that Donald Trump sent to Mar-a-Lago upon his departure.
Bloomberg's Joe Matthew, thank you so much for taking the time. And don't miss our interview with Micron CEO Sanjay Mehrotra. He's coming up at the opening bell here. Kevin Holt and Michael Kantrowitz back with us. And the political discussion really goes to what the fiscal response could be to a potential downturn. Kevin, how much are you weighing the midterm elections into your fiscal response and the way that you built it into your market expectation?
Yeah, so I try to take a longer term view when I'm making my investments. So one thing about politics is it's not predictable. So we try to kind of cut that out as much as possible. But I do think the American public has realized we've probably stimulated as much as we possibly can. So I think when you factor that into your analysis, I don't think the fiscal policy and/or the Fed are going to come to the rescue, just because I think they're kind of done what they can at this point.
But Michael, to that point, and Kevin raises a really good issue here, which is there isn't going to be the will to necessarily have a fiscal response to the bear market that you are expecting. How does that factor into what you see as the duration, the depth, as you prepare?
Yeah, well, the duration of this downturn is going to be a function of how much tightening precedes it. And, while oil prices are down, central banks around the world are still tightening interest rates and raising short-term rates. So there's still a long lag from when we're going to see that actually show up in the economy. In fact, we think most of what the Fed has done this year won't even show up in the economic data and earnings data until next year. There's a long and variable lag. So by the time we get there, given that we currently today have high inflation, so in the immediate term, there's very low odds, if they're even above zero, of any kind of stimulus, whether it's from monetary policy or from DC. And given the amount of debt we have, given the experience we just went through with all the stimulus and what that led to, it is difficult to see any stimulus coming without a real big drop in the economy. And so, we're not expecting an 08-like backdrop, but we do anticipate a pretty healthy recession, and I don't mean that in a good way.
Yeah, that's what some people are saying on the bearish side. Wells Fargo's Chris Harvey, though, trying to parse through some of the details in the recent legislation, writing about the tax impact on corporate America, saying, quote, with the buyback tax not going into effect until next year, it could cause some companies to accelerate buybacks into the second half of 2022, a small net positive to 2023 EPS. Kevin, how much does this ring true to you at a time when people would ultimately think that a tax on buybacks would be a negative, that it ends up being a positive because of the front loading that could happen?
Yeah, so I guess, as you said, short term, there could be some front loading. I do think it does, and we've actually, we reflected in some of our models over the last few days, and that it does take certain companies that are going to be buying back stock less and what the accretion of that is, and we can argue whether that's fair or not. But it does affect kind of the longer term value, which is where most of the value are in stocks, not short term. So yeah, it may prop up things short term, but it's definitely it's a negative economic consequence to the stock market over any extended period of time.
Michael, before we go, since you have been pretty bearish, I'm wondering what your cash holding is like and how it's changed over the past few months.
Sure. As we came into this year, we started really at the peak of the business cycle in terms of leading indicators, and everyone was very focused on interest rates. So as I said earlier, we've had a bear market already from the spike in interest rates, and now we've had a rally in the last 2 months if some of those fears have come off the oil. Going forward, though, we're going to see the economic consequences of all this tightening that's going on around the world, which again takes several quarters to show up. So we think the depth of this downturn is going to be sometime in the middle of next year. That's where economic data and earnings data and employment data will be at its worst. So we have incrementally pushed up our defensive recommendations, whether it's cash, treasuries, or more counter-cyclical sectors like staples and utilities. In fact, yesterday, we literally just upgraded those defensive sectors. I really think there's limited upside from the market here and a whole lot of downside from this lagged effect of rising inflation, interest rates, commodities, and really, everything.
Kevin Holt, Michael Kantrowitz, thank you both so much for being with us. Coming up, the morning calls, and later, Micron warning investors of a challenging market ahead as President Biden prepares to sign the CHIPS bill into law. More on that still ahead. This is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
First up, Baird downgrading Bed Bath & Beyond to underperform, citing accelerating losses and calling its recent rally the latest meme stock frenzy. Next up, Deutsche Bank cutting Palantir to sell with an $8 price target, seeing little support for a positive picture after earnings. And finally, Susquehanna lowering its price target on NVIDIA to $210, expecting the company's weakness to continue in the second half. Coming up, we're going to be talking with the head of Micron. This is Bloomberg.
Okay, so you're moving in on me, quick, distracting me with your fancy hands. I'm going to deal with your knight because it's really bothering me.
Ah, my knight.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
You know, just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right. I will concede. I can see. You've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. MasterCard is building on its core business, branching out into new products and services. It's up to CFO Sachin Mehra to ensure this growth strategy pays off.
The key to being successful in this kind of environment is to have a diversified portfolio.
Chief Future Officer, Wednesday on Bloomberg. Brought to you by Workday. Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Countdown to the Open. I'm Lisa Abramowitz in for Jonathan Farrell. Moments away from the start of trading with a soggy start to the day. Losses ahead of the Open. NASDAQ positioned to be down about 0.7%. Russell 2000, 0.4%. The S&P 4133 down 0.2%. And this comes as the front end of the yield curve continues to see gains. You see yields rise, and you see an inversion continue to the deepest going back to 2046 basis points as we do get 10-year yields go slightly up, but not nearly as much as those 2-year yields. A bit of dollar weakness, but pretty much meandering around here with euro 102.40 and crude higher after the report that a Russian pipeline into Europe was curtailing some of its output. What does that mean in terms of the outlook heading into the winter over in Europe? Joining us now with a look at the stocks moving at the opening bell, here's Abigail Doolittle.
Well, Lisa, it's interesting you're talking about the U.S. futures just a little bit soggy, or the index is opening a little bit soggy, but real underperformance from the stocks. stocks. Right now, down 2.6% or 2.4% off of its real lows, but in any case, really underperforming on weakness from NVIDIA and Micron. Of course, we've had two pre-announcements to the downside in 2 days on demand, and I know that you'll be speaking with Micron's CEO very shortly. Signet also lowered this as the Kay Jeweler and Zales owner cuts their revenue forecast on a consumer pullback, so that seems to be a theme. They've also bought Blue Nile, the internet jewelry store, for $360 million. To the upside, though, we do have oil back above $90 per barrel. That's helping out ExxonMobil, up 2%. And then finally, Boeing had been higher earlier. It's right now flipping just slightly lower. This, of course, as the 787 Dreamliner delivery has received an okay from the FAA, set to resume deliveries this week, maybe as early as tomorrow, Lisa.
Thank you so much, Abigail. Micron lowering its fourth quarter revenue forecast on weakening demand. The company saying bit shipments will decline, causing revenue and margins to follow. Let's bring in Kaylee Lyons, who's been covering all of this. Kaylee, what do you see?
Well, I see the stock down about 3% now at the opening bell, Lisa. And of course, as Abigail mentioned, it's really taking the semiconductor complex down with it. Almost every single stock within the SOX index, the Philly Semiconductor Index, is down on the day. You also have the likes of AMD and Taiwan Semiconductor down by a little more than 2%. NVIDIA is actually down about 9.6%. And as you said, Micron coming out saying fourth quarter sales may come in light at the low end or even below its previous guidance, with significant sequential declines in revenue and margins. The reason why is the company saying the environment is just challenging both this quarter and in the next one, with macroeconomic factors and supply constraints leading to a broadening of consumer inventory adjustment. So basically, the demand environment for certain products is weakening. It renews concerns about a slowdown, specifically in computer and smartphones that Micron makes memory chips for. So the idea that consumers aren't spending as much on electronic devices as they spend much more on everything else, and specifically on necessities. In a separate piece of news, though, the company did say that it will use anticipated government grants and credits from the CHIPS Act just passed, that the president will be speaking on later today, to invest $40 billion in the U.S. by 2030, really trying to build out manufacturing capacity here in the United States, because as it stands right now, at least estimated through the end of 2023, not a lot of memory fabs, our capacity is here, only about 10%. The bulk of it is in China and Taiwan, and we know that is obviously an area of sensitivity right now, Lisa.
Kaylee Lyons, thank you so much. And I'm thrilled to say that Chief Executive Officer Sanjay Mehrotra of Micron joining us now from the White House in the heels of that announcement of investing $40 billion through the decade to get more production into the U.S. Can you give us a sense, Sanjay, of how quickly the production of these chips could be diverted to the United States and it could become a majority of the output?
So this will be really for 2025, 2026 start of production here in the U.S. With these $40 billion through this decade that Micron has committed to be investing, it will enable us to meet the growing demand for memory that is anticipated for this decade. Memory is expected to grow faster than the rest of the semiconductor industry, and memory consumption is expected to double by the end of this decade. And we will need more wafer capacity in order to supply that demand. So I'm really pleased, and on behalf of the 45,000 team members of Micron, to be here today as President Biden signs this CHIPS and science legislation that really solidifies long-term technology and manufacturing leadership of America. And Micron is pleased to be playing an important role with commitment of $40 billion of investment, which will bring 40,000 jobs, including 5,000 direct jobs at Micron, and another 35,000 jobs in construction, support, services, with suppliers, and in the community. And of course, this is the largest investment in semiconductor memory manufacturing here in the U.S. This will be made over the course of the decade, bringing our supply online with the industry demand trends as well. So yes, I mean, today, less than 1 in 50 chips in the memory chips in the world are produced here in U.S. With Micron's commitment, it will enable us to produce 1 in 10 chips of the global memory consumption here in the U.S. So this is really major moving of the needle in terms of securing domestic supply chain and, of course, enabling national and economic security as well. And Micron is pleased to be part of this.
Sanjay, how much was this in the works even before the CHIPS bill was signed into law?
So what I can tell you is that the 2% of the global memory production that's taking place here in the US today would have gone way down if it was not for CHIPS incentives and grants. Because we have to be having a level playing field with foreign countries where the foreign governments have been providing incentives over the last couple of decades, and that's why so much production has moved overseas. So this incentive now is needed to reverse that trend from 2% becoming even smaller to now taking it to 10%. That means 1 in 10 chips being produced here. So our investment would have been far, far less if the CHIPS and science legislation would not have been in place here in the US. We would have produced more overseas. So we are very pleased that we are able to be part of US resilient domestic supply chain going forward.
Sanjay, this comes at a tenuous time in the economy, very hard to gauge where things are going. Earlier this morning, Micron put out a statement, as you know, downgrading the forecast for the rest of the year's revenue. What went wrong in terms of areas that there has been less demand for than expected?
So again, we have to manage the business for the near term as well as for the longer term. Some of the investments that I just discussed here are really looking at long-term opportunity of increasing memory and storage. Everything is becoming about data and efficiencies that data is driving in businesses and consumers' life. So we have to be able to supply that growth in memory over time through the investments that we just discussed. In the near term, due to the macroeconomic uncertainties as well as due to high levels of inventories that customers have built across various end market segments for us, those inventories are being adjusted down, and that is what is resulting in reduced demand for us. So compared to our last earnings call, we have seen further weakening in the industry demand trends, primarily because of inventory adjustments broadening outside of just consumer to other parts of the markets, including cloud, including data center, and industrial and automotive as well. So as these inventories at customers as well as at suppliers get balanced over time, then the industry demand health will return, we think, sometime in the next year. And important thing is, we are taking action to cut supply growth in the near term to restore the health of the industry. So in the near term, yes, we are reducing our CapEx to prudently manage our supply growth and bring demand and supply in line. And of course, that will have to be done in the industry as well. And in the longer term, the secular demand trends are intact, they are healthy, and that's what is giving us confidence, along with Micron's execution continuing to be solid in technology leadership, manufacturing excellence, product momentum, and customer relationships.
Sanjay, I know you have to go meet with President Biden, and we only have 1 minute left, but I want to get your sense about reducing supply ahead of what you expect to be reduced demand. How do you avoid this whipsaw of a complete lack and shortage to a glut?
So I think what's important is that there will be cycles in our industry. But if you look at across the cycles, just look at last 5 years, across the cycle, Micron actually strengthened its revenue and strengthened its profitability. We remain very committed to the financial model that we had discussed at our investor conference in May in terms of across cycle, continuing to deliver the revenue growth, profitability, and of course, free cash flow capability. So yes, we will always manage the business through the cycles, but across the cycles, because of increasing demand for memory and storage and Micron's continuing solid execution on all fronts, we are confident in the long-term business opportunities for our industry and certainly for Micron.
Sanjay Mehrotra, thank you so much for taking the time to speak with us. Micron's Chief Executive Officer on the heels of a pretty significant investment in what we are seeing in terms of the chip sector development in the United States. Right now, it is a pleasure to get some comments from Wei Li of BlackRock, who has been managing the global institutional investment policies there. And I have to just quickly get a comment from you, Wei, on this whole chip sector and the pain that we've been seeing in some of these semiconductors. How much of a signal is that in terms of falling off demand for high-income items like smartphones, like personal computers?
I think this speaks to a continuation of the trend of reshoring, friendshoring that has its roots way before the pandemic. Even back during the trade wars, and it paints a direction of travel going forward as well. And we have to be very, very cognizant in terms of what this means for longer-term inflation, cost of production, and we have to consider that as we think about asset allocation as well.
Well, I know that you've been pretty bearish over the past couple of weeks and months, basically saying stocks are looking less and less attractive and seeing value in investment-grade credit instead. What's the idea behind this? What's making you so concerned at a time when we see resilience in earnings? We saw a labor market report that absolutely blew expectations out of the water on Friday.
That's absolutely right. We had a very, very hot labor market report. And just for context, through the course of this year, we have been lowering our portfolio level risk-taking, incrementally decreasing our conviction towards equities and incrementally increasing our conviction towards credit, and currently have a up in quality bias in terms of our portfolio construction. And the reason that we're somewhat cautious in terms of the outlook for equities at this particular juncture, especially after the recent bear market rally, is because, number one, we believe that the pricing for the dovish pivot from the Fed is too premature. We're not out of the woods with inflation yet. And number two, we believe that earnings expectation is too positive. Yes, we have seen earnings holding up, especially actually sales holding up better than earnings. But as we head into a slowing growth, in fact, we believe the U.S. economy is set to enter a version of recession early next year, and Europe entering a recession this year. And that has yet to translate into earnings recession expectations. So because of the dovish pricing premature and earnings forecast at this juncture still too optimistic, especially after you strip out energies. For example, we think that actually staying prudent when we think about asset allocation is warranted at this juncture.
Wei Li, you're going to be sticking with us so we can dig into some of those comments in just a minute. Coming up, we'll also be talking about Russia halting oil flows to Central Europe.
The pipelines going west from Russia are the critical link to energy security in Europe. Russia is willing to flex its energy muscles against Europe, and this could be a sign of that.
That conversation still ahead as we look at markets that are in the red. At NASDAQ down 0.7%. S&P coming back off the earlier lows, down just about less than 0.2%. You see yields climbing, price down in the bond space. This is Bloomberg.
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
There was something of a gray zone battle between Taiwan and China.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Most fascinating entrepreneurs, because you also started really young. What did you learn? Did you always think that you'd be an entrepreneur?
Probably, yes. I think, which is a bit sad,
From
isn't it?
age, what, 5,
Well,
6?
maybe, I'm not sure. I come from a family of entrepreneurs, so even though I probably can spell the word and still can't occasionally, it's sort of in my blood. But it's really fun starting a business. And fun growing a business. I feel it's a real privilege. And I started my business officially at 18, but I think I knew I wanted to do it very differently from about 15. But I'm sure it's, if you're surrounded by it, it feels very natural. So yes, it's fun.
And it started how? You started by by you went to Florence. It was in Italy, and you started handbags.
Yeah, so I knew I was actually given a handbag by my mother when I was about 16, one of her old handbags, and I remember how it made me feel, and I think fashion is fascinating for the mood-changing, the confidence-boosting aspects, the sort of tribal aspects of what fashion does. And so I went at 18 to Florence, knowing that was the home of leather goods, which is what interested me. I just wanted to learn, actually, and be surrounded by craftsmen who, making things is important, and that's going to be very interesting, I think, over the next sort of 10 years. I think the onshoring of craft and manufacturing is going to be fascinating, actually. I mean, I watched the offshoring. I literally saw it, and I think we're going to be seeing that coming back to local. We have to. When we're all looking at our objectives in terms of carbon, proximity is going to be key.
The pipelines going west from Russia are the critical link to energy security in Europe. And a lot of the energy security planning that's going on in Europe right now is watching this not only for the oil story, which I think we'll talk about first, but also the read-through to what it means for gas. Russia's willing to flex its energy muscles against Europe, and this could be a sign of that.
Europe's energy security taking another hit. Russia halting crude flows to Central Europe and reversing an earlier decline in oil. Bloomberg's Julian Lee joining us now for more. Julian, how significant is this report that there was a cutoff in supply of oil from Russia to Europe on August 4th?
It's very significant for the countries of Central Europe, for Hungary, Slovakia, and the Czech Republic. They rely very heavily on that pipeline. So for them, it's a big deal. And for much of the rest of Central Europe as well, we've got a number of problems that are all happening at the same time. The refinery near Vienna in Austria is running at very low rates after an incident. The water levels on both the Rhine and the Danube are extremely low. That makes it much more difficult to move product by barge up those rivers. So this has come at a very opportune time for President Putin, perhaps no surprise there, and a very difficult time for Central Europe.
Julian, can you give us a sense of what this says going into the fall, going into the winter, in terms of how some of these pipelines are going to be leveraged and how Europe is trying to get ahead of that as quickly as possible now?
Yeah, I mean, President Putin has shown that he's very willing to play pipeline politics with both oil and gas. And those are pipelines carrying Russian oil as well as pipelines carrying other people's. You only have to look at what's happened to the CPC pipeline that carries predominantly Kazakhstani crude over the last 3 months to see how he's prepared to drag other countries into this. What I think he's doing is he's putting the blame on the sanctions everywhere that he can. I mean, Transneft has said that this disruption has happened because its Ukrainian counterpart has stopped providing transit services, so it can't pump the oil through Ukraine. It says that the Ukrainians stopped that because the payment that the Russians made was returned. So therefore, he's laying the blame for this on Europe. But he's going to keep playing these games with oil and gas pipelines right up into and through the winter to keep pressure on. I mean, I think this is as much aimed at getting Viktor Orban to raise his opposition to sanctions as anything else.
Julian Lee of Bloomberg News, thank you so much for being with us. Wei Li is still with us, of BlackRock, Chief Investment Officer. And Wei, I'm wondering from your perspective, the oil story has been a real question mark recently, being whipsawed in all directions. Do you buy into this weakness? Do you just want to sell as much as you can into the weakness, or do you see this as an opportunity to buy because this will be a resilient area with all of the uncertainty that Julian was just talking about?
there are a few pieces that play to this. Obviously, we have seen energy prices coming down, and that's going to likely mean that tomorrow's headline CPI is going to be lower versus last month, and it has kind of read across to broader asset allocation. Although we think that, of course, it's key to focus on core, it's key to focus on sequential, but more broadly, when it comes to energy investing, we would prefer to kind of access the theme through energy equities, energy producers, rather than the underlying spot commodities, because of the years of underinvestment. And we do think that through equities is a better way to play that, even as we head into growth slowdown. And again, we are forecasting a recession in Europe this year because of the oil crisis. And then more broadly, when we talk about kind of the elevated geopolitical tension, we do think that Europe actually has been and is going to take the brunt of the energy crisis. And in fact, when it comes to asset pricing, European equities are not pricing in full-blown gas crisis, but we have recently lowered our growth forecast because of the energy rationing expectation as we head into, going from a very hot summer to a very, very cold winter, and that is not yet reflected in equity pricing. But because of this somewhat gloomy growth outlook facing Europe, in particular, we believe that the ECB will not be able to push ahead as much as market pricing suggests. And as a result of that, we are actually currently neutral European government bonds. We're overweight gilts because UK is in an even deeper recession, but we're slightly underweight US government bonds because we believe term premium will come back in, and dovish pricing for dovish pivot is a bit premature.
Wait, based on your idea about following kind of the easing or the potential easing or the lack of tightening of central banks, what gives you conviction in U.S. investment-grade credit, considering that based on the recent data, the Fed has to go a lot further, has to raise rates a lot more, which will inevitably impact investment-grade credit and all fixed income?
I would first contextualize our overweight in investment grade in a whole portfolio sense. So we have been increasing our conviction to investment grade, but we have been decreasing our conviction to equities. And overall, collectively, that represents an up in quality adjustment to portfolios. And specifically as it relates to investment grade, I would note that credit spread actually widened versus beginning of the year. And even in the latest leg up in risk assets, equities have rallied, but the spread have not really tightened that much, right? So when we think about relative valuation, relative pricing, equities have yet to price in even a mild version of a recession, but investment grade is pricing a version of growth slowing down already. And if you think about fundamentals, corporate balance sheet is still reasonably robust. We're not expecting a mass default type of outlook. And if you think about the refinancing prospect and the issuance technicals, they are also somewhat supportive of investment grade. But within credit, we prefer investment grade over high yield, again, because of this having quality preference that we have.
Wei, thank you so much for being with us. Coming up, the market-moving events that you need to be watching. That's next in our trading diary. Right now, we are seeing markets selling off just a touch after managing to eke out gains last week. Deepening losses. NASDAQ down now more than 1%. S&P down 0.4%, 41.22. We do see yields just a touch higher in the front end. This is Bloomberg.
much of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan's society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
Time now for the trading diary. You need to be watching this week. President Biden discussing and signing the CHIPS Act momentarily. Look at the latest read on inflation with U.S. CPI on Wednesday, U.S. PPI and another round of initial jobless claims on Thursday, and finally the UMich sentiment survey on Friday. This was Countdown to the Open. This is Bloomberg.
Is there still room for Abenomics to be carried out in full in the way that Shinzo Abe imagined it?
The economic situation that Prime Minister Kishida faces today is very different from the one that Abe Shinzo was faced with when he became Prime Minister 10 years ago.
Does Japan need a new policy? Is that what Kishida has to learn, or are there parts of this that he should hold on to?
I think there are probably parts that he should hold on to. I think the main challenge which Japan faces is demography. The population is declining, rapidly aging. Women are totally underused in the labor force, especially educated women. One needs to think about increasing immigration. These are issues that Abe tried to address, but a lot more needs to be done to quote-unquote revitalize Japan.
As you look at the company you've created, how do you think you're having an impact on the world for the betterment of the world?
We are by far and away the best positioned entity to solve the question as to what does the human genome mean and how can you apply it to individuals.
Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history. Mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Businessweek about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in sari stores every day, also on TV, radio, newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with Number Fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the street, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their $1 million peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for Number Fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country.